Traders, I need to give my wife a hand and go hold our little girl for a little bit. So I'm just going to let all this run and hopefully it works out. If it doesn't, well, oh well. But anyway, mic off, and I will just go. I'll be back. Baby is in her crib. Although maybe not successfully. Good morning. We'll have to see how that goes. So let me know if I'm too loud, too quiet. Um, I'm going to set up my treadmill here, which been on a office chair uh, all morning. And anyway, I've got this noise cancellation thing going on the OBS, and so that's going to be new. So it should be, you should hear less irritating noises like typing and me walking and blah blah blah. So shout out to Jose, was it Mendez, who said, "Hey, why don't you activate something something on an NVIDIA graphics card?" Which I don't have, and I thought, I could just Google this and figure this out real quick. So I did. So anyway, locking it in here. Man, it sucks that apparently I got stopped out up here. Um, but such is life, I guess. Where did we get stopped? I bet you we got stopped out as it oscillates, because this is one of the detriments or negatives of having a stop that is too tight. But you're walking away and you think to yourself, well, I don't really want to have a loser as I walk away, so let me lock them all in um, to profit. And I think I left a trail stop activated up here somewhere for like 2 micro contracts. That's what these are. I should change the name of the stream to MES, not a ES. Anyway, I'll do that. And those are the ones that never got stopped out. But the original entry was something in here, right? And then the stops were up here. And then they all would have activated to trail stops somewhere down in here. So this, instead of being a 36-point closed profit, probably would have been somewhere in the neighborhood of $1,000 right now. Probably, I think I was total short maybe 8 or 10 micros. So I'm just thinking about how if the other one survived all the way down here, the way that the market has oscillated, and I think these turned into 5-point trail stops, it would have survived all the way down here for, let's see, what were we short? 71 and a half or something like that. About there, I don't know, something like that. Right into the 10 SMA and then prior structure, right? You had this breakdown. So this was, right, we had this, right? We had this. Longs in this area, or shorts got excited, then longs got excited and thought, well, we're gonna, raise the roof, let's go to the upside. And then when we broke down here, any return to structure was shortable to me. So that's why I did it 10 SMA and all of this structure through here, right? So that's why I did it, right? Just come into the bottom side of structure. And then what's nice is you have this nice volume node right before the breakdown bar. So I thought it would be scalpable for a few points, or a few shekels as I like to say, but it was more than a few shekels. So anyway, original entry was something like, I think, a 5-point stop. So let's put a risk reward tool on. So I think it was something like stops up here maybe, and then entry here, and then the 1R trade would have been down here, but the trail stop survived, which doesn't always do. Oops. Got breakfast coming here right now, so I gotta get out of here, but for a little bit, and then I'll come back. And I think we got out around here. We stopped out here. So 2.14 R's on, let's see, entry target, so 11, 10 times 11. Let's see, I think it was 10 contracts. I don't know, something like that. 10 times 12, what is that? 120. So maybe $600 rather. That just seems weird. The closed P&L is 36. I wonder if we put this on, if we see more. Okay. Was this 2 at a time? 1, 2, 3, 4, 5, 6. Man, I could have swore I got in more than 6 contracts. Well, maybe I didn't. So these are the ones that stopped out because I had too close to stop. And these are the ones that ran. Yeah, okay, so it was right down here. Whatever. Um, hmm. Oh, so my entry was even better than I thought. Okay, well, whatever. I was scaled. I know I was scaled into about 74s. That's why, right? So let's say our entry's here. Our stop was 5 points, 72 to 77. Okay. Here, we got to get this right for the sake of, let's see. There we go. About there. All right. And then our exit was about here. So had I not, so my point is had I not moved that stop, we would have about 2.5 hours or something on this trade. That's disappointing, to say the least. Son of a gun. Oh well, what are you gonna do? Live and learn, right? This is what happens though when you step away from, you're like, well, if I watch it, I can manage it better. Really? Maybe you can't. Maybe you should be letting all your trades run full stops. We do this management thing with trading, don't we? Oh, look at this. Breaking down? Interesting. So high volume in through here. Well, that's kind of interesting. I wonder, does this turn green or no, it should turn green down here instead of orange. You know what I did? I made my E-mini um I made my E-mini colors all green and then I made my NASDAQ colors all blue. So this upper chart here, green, that the green theme goes through everything now for the E-mini. So I just know when I'm looking at the E-mini, it's green. I just can't tell you how many times, guys, I've been looking at one chart and not paying attention really that closely to price, thinking I'm looking at the NQ because they're situated right next to each other. And for whatever reason, I think I'm looking at the NASDAQ or the E-mini. And this will prevent me from doing something stupid. So NASDAQ blue, and that theme goes through everything now. So that'll be really, really easy. Oh, it goes through everything except my DOM. I need to change my DOM. Anyway, I'll be back. I'm gonna step off the mic here for a little bit. I'll just leave this all up, and I'll leave this all up, and you guys can, I guess, watch what I'm watching. So the stream today has this here, the heads up down here at the very bottom. So it'll give you an indicator. It's got a few little bits of the quote board, little crypto, little heads up display. And then you also have time and sales, right? Over here and then over here. So those are and obviously it's pretty obvious. So time and sales are aggregated a little bit with a little, anything with size is comes in with the bright background. So anyway, a little more of my world here. I'll be back. Okay, coming into the office. Let's see how much background this mic picks up. Maybe it'll pick up my voice and not me moving treadmills around underneath the desk. Oh, okay. Sliding the treadmill under the desk, lining it up. If you don't line it up right, the belt, if you don't line it up with the direction you're exactly going to face towards your screen, if you go a little bit offset, you end up pushing the belt out of alignment ever so slightly, then it makes noises. So, I really got to spend time and line it up with my mat, line it up with the feet, with the desk, with the direction, blah, blah, blah. Sometimes my mat gets moved around by my chair. I'm going to end up buying a new mat here pretty soon. It's going to be black to match the color of the treadmill. It's just an aesthetics thing. Let's see how much. Oh. Yes, I hear myself through my phone. Oh, market making moves. FOMO. Oh, let's see. Plug it in. On the treadmill. Release the dragon. The standing desk getting elevated. Oh, it's hot in here. Alright, let's turn up this fan. Uh-oh, next level fan now. Here we go. What's the temperature like out there? 90s? Alright. Oh, look at this market. Ripping. Volume build. Someone's taking a stand up here at 39.50. They're going to roast them. They're going to roast those stops for a little bit. It's coming. At least the retest to 54. Alright. Alright. Let's see how the background noise is. Ooh, this mic is showing that it is maxing out. I need to listen to the YouTube stream here. Yeah, I think it's fine. So I was talking and it was picking up my voice as I was moving stuff around the office, which is good, I guess, because it's... Alright, let's mute the channel. So I think... Yeah, okay, good. I think we're good here. Hopefully you guys don't hear the fan overhead, because I have a fan turned on high overhead. So if you're not hearing like I'm in a wind tunnel or something right now, you're good. I actually hear a little feedback in my mic, and screen is really clear too. Oh, okay, cool. Well, I don't know about the screen. Nothing has changed with that, but let's see here. Let me get up to speed here. Yeah, audio's good. All right, sweet. All right, let's see what we can see here. Big volume node, breaking above. Let's give it a shot. I hear some kind of... That's my phone. That's funny. heck is going on here? I hear myself. It's the weirdest thing. Desktop audio's off. Why the heck do I hear myself? YouTube is muted. Yeah, everything is muted. I can just hear myself in the background here. Really strange. Oh, little buyer up here. Volume. Right up there at 100 lots sitting there at 56.25. Anywho, second cappuccino cup of coffee here. Oh, we're going to get roasted. Why are we going to get roasted? I think we're going to get roasted because of what is right above us. Bummer. Right up here. I usually go take those out. Because I went long. Always like that, Dirk. I do think we're gonna take out this 127 lot here. We'll see. I actually have more hope for downside because of the 127 lot. Hey Alvaro. Hey Dirk. Hey Jonathan. Hey Panama. Hey Alfred. Hey Kermit. Hey Robert. Gusa. Who else? Appraiser. Greetings, my friend. Daniil. Edvinus. Dave Snyder. Good morning. Emmanuel Santos. What's up, dude? Emmanuel, we need to shall I take it out? Take it out, Dirk. Oh man. Now I don't want it. It comes back. Come to Papa. Alright, let's tick. Oh, no, no, no. Let's see. Where the heck? Nope. Ay, ay, ay. Alright. Just leave those trailers in there. Oh, look at that. Look at the ice here. Look at that. What? I mean, why would you go find stops above the ice, right? Who's icing it up for us? 1,715 contracts? Yeah, yeah. There you go. Get out some here. Ba, ba, ba. Let's cancel these. Cancel these. Let's get out of this one. Alright. Get long two. Now we have no protection in. Alright. Some stops down here. Brackets back on. Liquidity now to the upside. Let's go get it. Liquidity right up here. Okay, we got to get rid of this. All right. Now some downside, some bouncy bounce. Where was that ice? Right up there? Yeah, it was right up there. Bing, bing, bing. All right, now me to get out of these. You know what we're scalping? We're scalping first touches between volume nodes. That's all I'm doing. So didn't really talk about it, but it's what I'm doing. Let's see. If we're long, we need to sell to get. No, that's buy. We need to sell to get short. You know, I really need to add very light looking column separators in my DOM because I did some DOM changes over the weekend. Oh, and I still have coloration to do right now. All right. Let's see if we can take this out here. So when it's dark on my screen and it has an S, that's a stop. When it's bright, has an L, that's a limit. All right. Let's flatten this position. Those were the stops right there. Hey, we're still coming out ahead. Okay. Up 50 bucks on NASDAQ, 250 on the MES. Oh, we should play the MES. It's better. No, I think they're both pretty good today. But anyway, what I was talking about just a second ago was scalping, right? So the players who bought here iced out here, and then there's no interest to sell this area, right? See how volume tapers? And so the likelihood of us going and taking out the rest of that iceberg is then very, very high. Very high. Let me see. Sell the ask, -3. Sell the ask. All right. Ooh, big ticks. You see it? Big ticks. Oh, you guys can't see. I'm pointing on my OBS screen. So there you go. You see the tick at the bottom? Popping like it's hot. How fast can you scalp? How fast can you scalp? In and out. All right. Thanks, Jonathan. The HUD comes from the whole HUD that you guys you're missing a lot of it, but you know, I'm doing the in OBS I'm doing the screen source thing where you know, just take a snippet of an open screen, and that way I don't have to worry about showing the world all my personal information sometimes too, dragging the wrong thing in, blah blah blah, and it's still showing the mouse, and it's still showing the screen settings, which is nice. So here we go. Look, right? You guys still see all that, don't you? Yeah, of course you do. It's a beautiful thing. Alex, I'm excited to be here on stream with you. Having a good day. Not just on these puny little micro contracts, but had a good day on the E-mini and the NASDAQ. Good trade, so here I am in what I call algo o'clock between 10 and 11, trading with you guys. Drinking oh, the little one's up. Drinking an espresso. So that makes life better. I saw a meme somewhere the other day. Oh, it was YouTube. And the meme said, it started out, oh shoot, did I just spill a little espresso? I did. It started, that's okay. It started out saying something like 60% of coffee drinkers, right? ... And then it showed like an unhappy person with the coffee cup in front of them. So it suckered me in, right? It was well presented, right? To sucker in some, oh, what are they going to say type of, you know, question. And then it said 60% of coffee drinkers still have the will to live or something. I can't remember exactly, but it was something to the effect that without coffee, you know, you can lose your will to live. It's a joke, but oh god, it's. I mean, there's coffee, there's having coffee, and then there's not having coffee. If you're one of those people that survives off not having coffee, I don't know how you do it. You're amazing. Why did I take the sell? Because I think we're oscillating up. Yep, I think we're oscillating up. The markets, that was just a profit taking um, pullback. That's what it looks like. And you might ask, why the heck how do you deduce that, right? Okay, so here's how we deduce it. Oh, Andre, you're just the kindest person ever. Andre's going to get any question answered he wants today. Once again, I appreciate it to the umpteenth degree. So let's follow the story of trap traders, shall we? All right, this espresso's kicking in. All right, so we came down off. This white line is developing POC. So it was happened to be POC for that time, right? Well, we call it developing POC because in our settings we show POC as it develops during the day, not as it is now. A lot of people just have POC and where POC is, and then they pay attention to, oh, POC just migrated. Well, in Sierra chart, there's a setting that you can turn on developing POC, which means you can see where the POC migrated from early in the session. So you know it's developed or how it's developed during the day. And that allows for better analysis after the fact. Okay, so we have this developing POC. It happens to be right above TD Ameritrade VWAP, and there was no interest to sell this area. Then when we came up, they iced it here, right? And then we came up again, right? And whoever bought against this ice, they iced it again. But now, think about it. There's still interest to buy right here on contracts and right here with volume. So on the way up, there's still interested buyers here and here. Now that tells you something about the strength or the willingness of buyers to buy short term. And they bought against this structural resistance. It's not like it went up here and built a little volume node, right? That kind of tapered. No, it was like a big player icing out and they're just buying it, right? So we thought immediately it's going to go higher, right? We're short from here, right in this area. We immediately thought it's going higher, right? Hence why you saw me trying to get out, right? Right around break even for a tick or two profit. So that's what I did. That's what I was thinking in real time, is that I want to get out of this position because I think it's going to go break higher, because here, if the players buying here are also de-risking here, and they're able to de-risk so right into essentially resistance so easily, those contracts filled so quickly. And if they're long from here, they're already thinking, and if there's no interest here, they're not going to ice anything. Yes, they filled the rest of this ice. It was like maybe 2,000. But now they're going to be buying again because they know, just like I do, that this market is already strong. Okay? So, is there a lot of wind in my mic, guys? I'll stop here for a second just to get that feedback, because I hear wind through my my headphones here, but I want to know if this this filter in OBS is working correctly. I'm trying to improve things because I get it. It is annoying to hear all the background stuff. Good for you, Andre. There is some wind. Mic is all right. What about the treadmill? Can you hear the tung, tung, tung? Any of that? Maybe I need to turn that back on. I don't know. But I should probably make sure I get it. Well, when I'm talking, you should be able to hear the treadmill because the mic is then turning on, I guess. And it's a pretty good mic. But if I'm not talking, then you shouldn't hear it. Kimster says, it sounds like you're trading in the middle of a thunderstorm. Yeah, I gotcha. Okay, so it's only when I'm talking. That's the takeaway for me, is when I'm talking you could hear stuff. TFT! What is going on, TFT? Good to see you. So anyway, so that's the short story of players buying here, de-risking here quite easily, and then price still moving up. And now you see there's a little resistance up here at this ledge, but we're still pushing right up, and we're building volume right into this area. So to me, it just looks like the upside is market is pushing through on volume more easily for now to the upside. And if we look at, say, a 5-minute chart, here, let me see if I can find it. Bing! Yeah, there you go. So here's the 5-minute chart right up here. If you look at this 5-minute chart, you can see how we held VWAP almost to the tick. So that's TD Ameritrade VWAP. And you see how all of our markings from the footprint are showing up here. It's a beautiful thing. So look at the TD Ameritrade VWAP held right here to the tick. So we're around the 50% mark, right? And we're now getting a little bit of profit taking here from the longs. So if we push above the 618 here, and then we push above this BBWC, then it's probably on to new highs. You can also put, so that's kind of a bigger picture thing. You can also put a trend line here like this, and we're just busting through. So for me personally, now this is a nice pattern, by the way, pullback and then a deeper pullback into this hour. It's a nice pattern. It's a good pattern for continuation into the close. So Dirk, if you're long, maybe stay long potentially. If you want to let a winner run, this thing might easily bust and break highs today. But my point is, short term, this is so that's my overall, like, it looks strong, but short term, the market will often come up, resist before a trend line or whatever, and then make a false breakout above the 618, get all the retail stops, because everybody's got the fibs on here, and that's like, if you're a simple trader, this is the easy thing to do. Put a fib on it, sell the 618, right? If it goes above the 618, you probably stop out, right? So if you got a small account, you're doing 2 or 3 contracts, E-mini, you're going to have a tight stop. So if they go get stops here and then sell it, then you have this trend line with the false breakout, okay? But right now, we're oscillating up. So if retail steps in front right in this zone, they put stops up here, they go get the stops, then we turn and book it back down, then it might be the failed breakdown look. If right now retail's shorting and they're getting 2 offsides, you'll be able to tell in that if we break through up here, let me erase this. If we break through, essentially this is kind of a BBWC because of the big breakout bar. If we break into this little red zone up here, and we come and travel and go all the way through it, then retail's probably just on the wrong side and they're going to bust new highs. So anyhow, there's the some of my thoughts about this current structure. All right, let me go look at appraiser guy. POC is volume for this line. Oh, sorry. Let me get it back. All right. This line is volume here. One of the things that I'm consistent about is naming stuff so that it's easy to understand. You see this up here, how it says VPOC? V stands for volume. Hey, I wonder if you guys are able to see my drawing tool. Because I in OBS right now, this is screen or browser based. So let's see if you guys are able to see this drawing tool. Yep, I think you're going to be fine. Anyway, right up here. Yep, let's see. Yay, you can see it. That's great. Right up here, how it says volume POC, and then VVAH, volume value area high, volume value area low. You're like, that's too small. I would do that on all your labels. So others and you never ever forget what it is that is on your chart. And then if it's time-based, I'd put a little T, TPOC. Anyway, moving up here. Above the trend line. That's why we have a 5-minute chart on this footprint. It works perfectly with that 5-minute chart. All right, above the 618, retail getting roasted. Let's see how it behaves here. Notice at the 618 how retail stepped in. Somebody stepped in front. You see the volume? Now, is it huge volume compared to this? No. Is there more volume here? Right into the 618? Yep. Probably all passive volume. Now look on the MBO. They're defending it. What do retail traders hate? They hate seeing size. So they're defending it. So what is retail going to do? They're going to go into the liquidity. The 70 up there. The 10. Get me out of this trade, Scotty. What do we say as traders who are trading into everybody's stupidity? We say, beam me up, Scotty. Maybe. I don't know. All right. If you guys are not fans of Star Trek, the old one, I'm sorry. I'm sorry for you. Stops here now, above here. Now, still interest to buy. Way up here. Look at that. Still interest to buy. See that? 60 out of 7. Not crazy, but stops above here. There's no real volume. They're letting it oscillate back down. There's no real volume up at these highs, so they're not really trapped. So everybody who's shorting, taking profit here, and they're just buying it on the pullback, you see that? They're just buying it. Maybe they let it go all the way down here to get all the stops. Everyone who's shorting it here, taking profit. Now, this is a whole bigger consolidation zone, so let's not be too overconfident. But everybody who's shorting because of these highs and everything, if you look inside the candles, not a lot of volume. So big taper on the volume. My thesis is that retail's on the wrong side here. They're going to go run it. I think these are all weak hands selling. But this is why markets move the way they do. Because weak hands come in. So right now we haven't even probed into this price action-y kind of candle. Haven't even probed. Do you think that this wick is going to have stops? Yes. So what's the pullback here? What's the buy? The buy is to buy this pullback for a break of this candle here. If not on this candle, maybe in the next one. This price action here where we moved down from this wick, got all the price action-y kind of traders going, let's go short. That's sell pressure. I'd be patient here. I would be patient. It pulls back. I would be buying, looking for new highs. Am I long? No. Just talking about it. Just talking about it a little bit. So BBWC is base breakout with consolidation. So BBWC is kind of like this. Here. This is answering Hoyen Yoon's question. Alright, let's say the market moved like this and made new highs and then came back. And and then consolidated like this, right? And then it went up, and then there's one bar that goes shoo, and so here's the open is way at the top, the close is down here. But this is all consolidation, right? So it's a base. It has a breakout, which is this bar. And then WC is just with base breakout with consolidation. So the with consolidation is just meant to tell you, it's meant to remind you that the more consolidation this has, so the more look left structure you have from this consolidation, the better the setup. So you get a breakout bar, and then you get the market moving down. Okay? So when we come back up to this market, all right, let's do this. Make it yellow. When we come back up, let's go make this blue. All right, when we come back up, this area here is going to hold trap traders because of this bar that has a breakout bar and leaves all these longs up here trapped. So this yellow section here with this red is the BBWC. And so typically what happens is we make a little move in here. You get a volume node like that on your footprint or something. And then we spin off of it like that. So you get the scalpable area of, let's say, yellow's our entry, short. Blue is our stop, and red is our take profit. You typically get 1R or better, where this would be 1R, and this is 1.3 Rs, something like that, right? And this is your stop. So the distance of your profit taker is typically better than 1R on a BBWC. Is that pretty clear? Now, on the BBWC, there are a lot of iterations to it. I mean, a lot. And there's context surrounding the BBWC that can make it more or less successful. Always caveats with trading, right? But that's trading. But that, maybe I'll save that for another day. I can't give up all my secrets in a single live stream. Come on. Let's look at this market because I'm itching to trade. And I need to shut my door real quick, so I'll be right back. Even cold espresso's good. All right. Andre, I look at time and sales all the time for order flow. You know, you happen to see what you guys are seeing is the time and sales that is located right next to my trading DOM. And my trading DOM has MBO, has pooling stacking, has recent bid and ask volume. And right next to it, I have time and sales. And so my time and sales, I only have one of them per instrument. But what I do is for anything that's size, it highlights. And it also aggregates same price and type. In other words, let's say the market ticks down into a price. It doesn't give me a separate line until price moves through that tick. In other words, I can see ice developing through my time and sales in real time. And you guys will kind of see that, right? Sometimes right up here at the top, see how this went from 1 to 7, right? So these are, the ticks are changing, see that? But sometimes, you see, This is 8. Okay, let's see if we can catch one. See, there you go. 3, and then it went to 4, right? It's gotta slow down a little bit. There you go. This one went 3, 4, 5, right? Because it's not moving through the bid or the ask there. And so until it moves through, it's not going to give me a new time and sale line. How is that useful? Because you can see absorption in real time. Now there's all kinds of ways to look at order flow. Ways. There's all kinds of methods to look at order flow. Right? Time and sales is cool. If you have actual numbers on your footprint, you can look at order flow. Is it the same as looking at a DOM? No, of course not. Of course not. But can you know if price is hitting the bid or the ask and how quickly in real time? Yes, you can because of volume per second overlay. Now, is it all centralized to one little spot on your screen? No, it's not. I prefer the DOM in time and sales. That's what I prefer. I prefer the footprint for structure. Finding trap traders, but for looking at order flow, and if you define order flow as simply observing the flow or transactions of the market in the clearest possible manner, then the DOM and time and sales for me personally is where it's at. I mean, obviously it depends on your interpretation. You know, order flow is this term that's used all across the World Wide Web between traders. And they put it on everything. And it's kind of a selling, it's a selling, they use the term because they know that it's catchy and that a lot of people, so people like these vague terms. Order flow, ooh, the flow of orders. And then, you know, because there's no agreed upon definition for it, right? All these people can put whatever they want in terms of the definition and say they're right. Like, you don't go into Webster's and say order flow, what is it? What's the precise definition of order flow, right? I mean, it's the flow of orders. And what do you have to look at when you're looking at order flow, right? You're looking at essentially volume per second, right? You're looking at size of players, right? You're looking at that volume's ability to move price. Now that volume includes how many orders are hitting and how big they are, right? So, and then you're measuring all of that through time. Okay, so you might be good at reading order flow every half a second. So here we go. We're moving up. See what I was talking about? Right. See how we use the story of trap traders to figure out we should be buying the pullback? Anyway, I just want to point out that my analysis is predictive, right? Using the story of trap traders, right? I am tooting my own horn, but not for the sake of saying good job, Mike. It's for the sake of you guys recognizing that how I analyzed the market actually worked. In real time, right? We predicted the direction of the market well over a short time frame, and we could have placed a trade that allowed us some pretty decent risk reward, which is what? Buying the pullback for a break of highs, which would have been what? In terms of, you know, now let's not put some bias on here. Let's say we put a stop way down here and we entered where we were talking about up here and into the highs up here. 1.4 Rs, better than 1 Rs to look at the short-term structure of the market and take a trade out. That's good. It's not bad. Anyway, would have been nicer if I took it, but man, you guys are costing me money. All right, Time to end the stream. Let's end it now. No, it's okay. Sometimes I feel that way, but I was talking about the other day on I don't know, maybe was it Friday or Thursday? I was talking about this is the time after I've made money on the E-minis and the NASDAQ where I want to stay connected to the market, but I don't want to be trading my ass off over trading. Because by and large, if I continue trading with the E-minis and the NASDAQ, these are the days where you just want to be trading after the open, and then you start to, I don't know, maybe just pay your broker, or it's not even worth it anymore for you to stay too connected to the market. I mean, you still, I want to be clicking buttons the whole time on here, to be honest. That's, confessions of a trader, right? I want to be clicking all the time, right? And I see above here, stops, scalp short, right? Get long from here to here, stops here, there's, right, BBWC from here, right, old BBWC. So we took out the stops, this is the highs from earlier, BBWC in this area, get short, back here, scalp it, right? Bostic is talking, by the way. But overtrading has been a nemesis of mine over the years, so, you got to develop a superpower, and for me, one of the biggest superpowers is SOH, sitting on hands. Anyway, so back to order flow, I guess. Order flow just involves the reading of volume and size over time, and that, however you want to slice it up, if you want to slice it up in 10-second increments or quarter-second increments or whatever you can keep up with, right? The more you process, the more difficult it's going to be. The more time you need to get good at slicing up small amounts of time. However you dice it up, order flow is simply just reading, right? Volume, size, and its ability to move price in one direction or not. So, however you do that, DOM, time and sales, you can do it on a footprint, you could do it on a bookmap style chart. I don't know, there's a lot of other iterations of things out there. And order flow is not trying to catch every little single order in the market. You can't do it. If you break up order flow by order and you have a separate line, your brain can't process it. It's not fast enough. Because when they batch the data and the data flashes across your time and sales, and it's 3 times the height of your total time and sales screen, and it batched in, I don't know, 20 ms. Can you catch anything but the top third? The answer is no, you cannot. So there's an art, right? There's a technique to capturing what you think is going to be important for you based on your trading style and your time horizon, or the time that you decide what works for your edge to spend in trades. So for me, I think I look at order flow that is not as real time as some people. My order flow, the way I aggregate my time and sales, the way my DOM is set up, it's for an old man like me. But there's some young bucks out there. I stare at these DOMs. They have 3 or 4 or 5 time and sales all aggregated by size. They have a cumulative delta filtered chart, and they have 4 or 5 of them, and they're able to see the order sizes and where they hit on the chart because they're filtering the chart. So they use that with like a bookmap style multi-filtered charts, right? In say configurations of quad configurations, bookmap style with order bubbles. So they're able to visualize much shorter time frames using different tools, and they find confluence and they go, boom, I'm in, right? And then boom, I'm out. I mean, it's either right very quickly or it's wrong very quickly. For me, I might see something that tells me it's wrong fairly quickly, but my time horizon is definitely probably 30 seconds to a minute typically and higher, right? I'm not looking to capture 4 or 5 ticks. I'm looking to capture 4 or 5 points or more. And if I have a trade setup that gives me more, great. If I think the market on a certain day is moving 10 to 12 points with ATR 4 or 5 on a 5-minute chart, let's say 14 period look back ATR 4 or 5, well then I'm gonna go for that 10 or 14 points and size appropriately, right? So my stop loss will always be about 1% of account. And based on how wide my stop is, I'm calculating for 1%. That's it. And if I can get 3 Rs on certain days, because that's how the market's moving, it's moving in mini trends, then that's what I'm trying to do. So I'm not always in scalp mode. I'm not always in, well, I should say, I'm not always in short-term scalp mode. So my order flow setup, which for me involves my DOM and my time in sales and my footprint, because your footprint is giving you order flow on a much higher time frame. It's aggregating the data and slapping it on a chart and saying, this is what has happened for flow in the past. Now, for anybody who says, well, that's not real-time flow, every fucking thing you see on a chart that went into your retinas happened in the past. So if you want to say that that's not order flow, then let me tell you something. You don't understand science, because everything you're looking at happened in the past. You're either aggregating on a very small time frame or a bigger time frame. How do you like them apples? Anyway, someone pointed out something to me the other day, and I said, okay, all right, dude, let's talk. So anyway, part of, I hear things from people that I'm close to that they're like, I learned it from this guy. And I'm like, that's great. As long as you make money at the end of the day, that's all I care about. But if you're going to nitpick definitions, then you better understand what it is that you're defining, right? Don't put some spiritualistic definition on the term order flow. It's complicated. I get that. But just because it's complicated doesn't mean you can't define it scientifically or properly, right? Flow, as we've already said, the flow of orders, it's not some woo-woo thing, right? Sure, nature is complicated and sometimes we can't always define it. But it doesn't mean it's some undefinable thing. It just means there's way too much going on and you got to get good at reading all of those variables quickly in real time. And how do you do that? You practice. Now, is that the best way for you? Maybe for you it's the best way. For others it's something else here. Oh, we forgot our bracket. Man! Oh well, what are you going to do? This trade right now can go one of two ways. It can go very well very quickly, or it can go very bad very quickly, by the way. ba. Ba 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 ba. All right. We're in the stop zone. So here's order flow for you. God, I'm gonna love overusing this term now, just to annoy the shit out of people. Okay, sorry for the language. When you get something like this, and it goes like that in real time, this footprint is updating. Oh boy. Well, it was updating. It's not updating anymore. Guess what? Oh boy. Something's gonna happen here. Son of a gun. This sucks. Okay, when you get this kind of pattern in real time, so this footprint updates every 30 ms. So it's as fast as a lot of people's DOMs, by the way. So when this creates this pattern like this in real time, what ends up happening is you're getting sellers like this, and it's either going to rip or it's going to turn around and come all the way back down. Jeez, this sucks. Wonder what happened here. All right, Shift F9. Let's clear it all out. Yeah, I got a problem with connection here. Sorry. Hey, Lucky Prod. Nice to see you. I hope you guys are still here. There it goes. Am I out? Am I still short? Well, that was garbage. All right, let me go back. Sandy says ES. These charts are ES and NQ. You know, when I start getting connection issues with Denali, I'm just gonna flatten trades. That's what I do. This is one of the reasons why they need to have a better web mobile setup. So you can just say like, oh, yeah, I'm having problems with the desktop software. It disconnected. I'm just gonna get on my phone real quick, access the same thing, like you can with CQG or whatever. Come on, Sierra Chart, you can do it. Hire somebody if you don't know how to do the mobile app. Come on, you got this. Anyway, let's see. Oliver Mulder, Orderflow. Yeah. Man, you know what's crazy about quote unquote order flow? Is there's like 15 million levels at which you can get good at order flow. What do I mean by that? It's like we have so many tools, right, that show us slices of what happened in the very recent past. You got recent bid volume, recent ask volume, right? Right? We have total volume, we have size of orders, we can filter by size of orders. We can look at multiple time in sales. We can speed up the refresh rate of our DOMs to look at even more current price action, right? Although there's a limitation with that, just because of our brain's ability to process and how long the signal takes to go from speed of light into your optical nerve to your brain, and then your brain to bounce it around, then have a thought, and then send a signal all the way down to your finger, your hand, and actually make a reaction. But you can be processing. Hey, I noticed some very quick pattern that I've seen before, and when it does this, price typically does this under this scenario. I can't always define what that scenario is because I'm not an introspective person, but kind of like chess. Like, it's a little too complicated for me at times, but the scenario is familiar to me, and it typically works out well under these conditions for me, right? So that's order flow. And order flow, because of the amount that different people can process and how much time you've either spent studying it, there's like multiple guru levels of order flow, and a lot of them are valid. There's this guy, what is his name? TikTok? Oh gosh, he always talks in like these parables, and he deletes his tweets after the fact a lot of times. Anyway, he started writing a blog. I think his name is TikTok. I think. Is it? TikTok. Yeah, that's it. I can never remember his name, Jonathan. And some of the things he says about order flow are absolutely hilarious. But then some of it, you're like, nah, yeah, that kind of makes sense. And then there's other people that just use like order flow for everything. They're like, order flow is my magic word for I see some shit in the market that nobody else sees, and so come pay me money to predict the movement because I see some flow. It's like the Force in Star Wars. It's like, ooh, it's the market is flowing in this direction. This combination of things is order flow, but they never define it, right? Say, oh, I got a feel for it. It's order flow. Look at the way this chart. Look the way this candle formed. Order flow. Really? I don't know. I think if we're gonna agree on something, we first gotta agree on what is the definition of the word order plus flow. Order flow. It's the flow of orders. Now, however you dice it up, you need to be looking at orders, whether it's big orders or little orders or small or big lots or groups of orders in 5 seconds or groups of order in 10 ms or groups of order whatever, aggregated orders, whatever. You at least need to be looking at orders and numbers, right? Or some physical color representation that your brain can process and say, that's X size, whether it's relative size to the market, right? But you gotta at least agree to that. Anyway, I think I've done talking about order flow, but let me go look at the comments now after I've sufficiently ranted. I've got my rant out of the way, Andre. All right. I don't know what some of these comments even refer to. Andre says, since you are not using Bookmap, but Footprint plus DOM plus time and sales, what disadvantages do you see in Bookmap? So, I'm not showing my quote-unquote Bookmap style chart, but my Bookmap style chart does exist on my screen. And it includes large trade bubbles. It includes market depth historical graph or heat map. And then it includes 1,000 volume bars. Because I like 1,000 volume bars, and I like to be able to see structures on that. And then it includes a bid-ask volume ratio. In other words, bid-ask volume ratio is simply what is the ratio of bid or ask to bids getting hit in real time with a specified look back. That's it. So when the market is moving up and you have more asks getting hit, it's a little like cumulative delta, right? Little bit, except you can specify the ratio and the look back. So you can look at an average essentially in the short term and see how that's moving with or against you. So bid-ask volume ratio. So that's standard study in Sierra chart, right? There's nothing complex or custom about that. So you can see at times when that ratio is high towards the ask side, it won't move the market. In other words, that's absorption, right? And then the opposite can sometimes be true. And then sometimes you'll notice, and this is quite often, that near bottoms, the bid-ask or ask-bid volume ratio will hit a maximum difference over a period of time, and that will be the bottom, the local bottom. And it will do that time after time after time for the session. And it'll maintain that behavior on the session repeatedly. So Andre, I do have kind of a bookmap style chart going. It's just not shown. And I don't have enough screen space for you guys to show it. Otherwise, it would be on the right over here. It's actually to the right of this footprint. And then you guys wouldn't see the time in sales. All this would get smashed. And then undoubtedly a bunch of you would say, Mike, your screen is maybe too big. I can't see anything. But it's there. But is it traditional bookmap style with the line on close? And does it use MBO to find ICE? No. The rhythmic data feed opens up the MBO to its software users and coders. So it opens up the full data to look at things like unique order IDs, which is just more data, but it's included in the MBO from the CME. So the CME has this data feed called the MBO, Market by Order. Okay, and Market by Order, or MBO, includes things like unique order IDs and the sizes of bids and asks, resting bids and asks. So for every transacted order, it'll include things like unique order ID, which then a software coder like Bookmap, if they have that data, when you have an iceberg, the unique order ID is the same for subsequent reveals for native icebergs on the CME. And those are icebergs that are hosted natively at the CME. The CME allowed in 2017 because they, big boys and girl traders didn't want their icebergs being spotted in an absolute way. So they allowed synthetic icebergs. So they allowed for support, which is where the orders are hosted on servers that have co-location with or right next to the CME. So the servers so the orders the icebergs are hosted there, and that each subsequent reveal of the main iceberg has a different unique order ID. And so you can't match up the unique order IDs and go, yeah, that's part of the same iceberg. Okay? So Bookmap, because they use Rhythmic, and because Rhythmic gives all the data for the MBO and releases it all to the software coders, I guess maybe I could be describing this better, but because they release all of that, Bookmap is able to take the unique order IDs, match them together, and then you get an absolute iceberg detector. It tells you, boom, this is an iceberg. It's part of the same unique order ID, and it gets pretty dang close on the size. If not exact. I've never seen it compiled, so I don't know if there's limitations, but probably pretty dang close. And then to find the non-native ones, the synthetic icebergs with different unique order IDs, there's no guarantee of that. There just isn't. You might be able to say, well, I have an algorithm that looks at orders coming into the market every 1/1000th of a second, or I don't know, 1/10,000th of a second on the data feed after an order closes. And that algorithm can look at the percent difference, that it's within 5% of the parent ID, and typically synthetic orders fall within that range. So the probability, because of the timestamp and because of the lack of order size difference, so because of those two things, it's probably a synthetic. So maybe Bookmap has something like that. So they try to catch both, but on the synthetics, there's just no guarantee. None. Zero. Because there's variables involved that tell us it can't be. You can't know with certainty. Which is why I say over and over and over, all you really care about, if you're looking at icebergs, is your footprint and your delta and your volume. And if you see that in real time, at price, building, and your software, your footprint is configured correctly to show you large, and when I say large, that is dependent on your interpretation of what you think large is, and if that works for your trading style. But if your footprint is configured for large delta imbalances in real time, and your time in sales is configured well, and your RBV or RAV, recent bid volume, recent ask volume in Sierra chart, is configured well, you'll be able to see those occur in real time. And so you'll have a little leg up with quote unquote order flow to see how the market moving against a position, against a passive player, which is what an iceberg is. It's in terms of orders, all orders on the CME are limit orders. So don't confuse yourself with market and limit orders. All of them are limit. Every single order on the CME is converted to some kind of limit or limit stop order. There's no such thing as a true market order on the CME. So don't get it twisted. Don't get confused with that. You either have limit orders that go and pay the spread, right? They go hit the ask, or you have limit orders that rest on the book and they wait passively for people to come fill them. All icebergs reveal liquidity on the book, and so they are passive players. Essentially, they're waiting for the market to initiate into their price. So all you really care about with your footprint is volume, and you care about your deltas, because deltas is ask volume minus bid volume at tick. That's it. So ask volume by definition is volume that is hitting on one side of the spread or the other. So ask volume is volume that is transacting because people are initiating to hit or lift the ask side. So that's ask volume. So ask volume at tick, ask volume minus the bid volume on that level equals delta. And bid volume is the opposite of ask volume, meaning it is the volume that sellers are initiating into the resting liquidity on the bid. It's not a market order, it's a limit order on the CME that hits on the bid. That's technically correct. So if you start using words like market, limit, my market order, my stop never filled. Why didn't my stop fill? Well, because everything's converted to a stop limit order. Go read the CME, right? Get it right so people aren't confused. Anywho, what we care about is just real volume and real absorption and real initiative. Does the initiative move the market? And on what kind of volume? And that will tell you right away whether players in that area are willing to sell passively, maybe from a perspective of wanting to short the market, or maybe they're selling because they're already long. Either way, people placing orders on the limit book and high-frequency trading firms selling a level tells us there is the interest to buy and sell that level either passively or aggressively. And if aggressive players are moving the market today, by and large, well, technically, let's not confuse the issue. Price moves because people initiate in the market. Right? They pay the spread. In other words, instead of just having limit orders on each side, right? I'm buying on the bid, and then player B is saying, I'm buying or I'm selling on the ask, and we all put limit orders. If nobody took initiative, price would move. We'd just sit there and we'd all stare at each other. No, you go. No, you go. No, you go. No, you go. So what we care about is when one player goes, does the whole crowd get up and start sprinting, right? And do they knock over the wall and keep going? Is there enough momentum in the market to move price far enough for you to have a take profit order that is far enough for you to consistently make money in the market? In other words, is your risk reward achievable for your setup consistently? So all you're trying to do as a trader is figure out every single day, where has price transacted, and where might traders who transacted before, where might they want to get out? Conversely, if we're doing price exploration into new all-time highs, and the thing you're trading has been trading for 10 years, so you have a point of reference for how it normally moves, can you use order flow to figure out, hey, it's more bullish than it is bearish? And this is why people who've been trading 10 years, you'll see sometimes they go, when it's going up, I buy. When it's going down, I sell. And to them, it's like, hey, dummy, if you're doing anything else besides that, you're overcomplicating it. I get that. Right? Because sometimes prices are moving into areas that have no prior structure. You're like, what are you talking about? All-time highs, right? Or all-time lows. Right? If it's an IPO or something like that. All-time lows. Like, we don't really know. All you got to do when it's doing that is you need to know how to be able to read whether bids and asks or buy orders and sell orders on the book, or buy orders and sell orders that are taking initiative and buying or selling into resting liquidity are actually moving the market, and how much? How much does it take them to move the market quickly? All right? How committed are people to continue buying? Sometimes people commit for 4 or 5 points on the E-mini, and then they commit the other direction. And we call that chop. We call that a neutral day, where the market just can't seem to decide. Right? And what's likely happening? Larger players are like, either I'm not interested in this market, or I'm accumulating one direction. But I can on a day like today where there's quote-unquote consolidation, I can hide, I can disguise my footprint in the market, right? What I mean footprint is I mean the volume where I'm buying and selling can easily be disguised. You ever look in a declining market and you see these icebergs for like 5,000 lots at a time? They're right to the meat of the decline. Do you think all these candlestick traders see that? They don't. Because you're getting like 400 or 500 contracts transacting per second in a heavy decline, and these guys are going, we have an iceberg here for 5,000. In about 7 or 8 seconds, sometimes the whole thing fills, and the prices just bounce a little, and all of us footprint traders, the dumb ones, we're like, I'm gonna scalp 6 or 7 ticks off this because I see it on my footprint, and it bounces 6 or 7 ticks, and then we all market sell. That's all converted to a limit order. Stop limit order of 3 points on the CME. Why? That's the price protection limit. We all market sell to get out. Bing! And then price collapses right through it. And we're like, well, that didn't hold us support. Guess what? That's a larger player getting into the market on all the weakness. And you'll see sometimes these 5,000 lot ICE orders. They'll be every 5 or 10 points apart. So if you have these bid-ask volume difference projection bars that essentially just look at big imbalances and project them out until you choose to say, well, that's the end of my data, or price interacts with it again. And you'll see that, oh, hey, well, there's 5, or these are 10 points apart, and then you go look back at the source, and you're like, dang, that's like roughly 5,000 contracts. Damn, they just bought 25,000 contracts. Whether they went long from that position or covered a short, we don't really know, or a combination of the two, right? Maybe they covered their position, and now they're scaling in. We don't really know where that starts and stops, but large players on a day where the market goes sideways and chops around and is fairly neutral, they get a position for the next move in the market. So what tends to happen when volatility goes down is you can usually buy some premium, some option premium. It gets a little cheaper because the volatility contracts, right? And so the premiums get cheaper, and then you can take a defined risk bet. So those are opportunities for sure. Anyway, let me look at the chat. I'm sure I'm missing stuff. Lucky Prod says, "Oh my God, you've been arguing with the Dom Tape Hardcore Scout." No, I haven't been arguing. I've been talking to a few people that have opinions about it, probably because of who they watched on YouTube or who they've been talking to recently. Who knows where this stuff comes from? And so their angles were confusing me. I'm like, well, what are you talking about? I couldn't understand why they were talking in the way that they were talking. And so me loving to talk about markets and, just not necessarily debate, but just discuss ideas, I was like, that's right, that's not right, and here's my reasons. So, there's always something lost in translation, so whatever. Is what it is. So Lucky Prod, you know me. I like to rant. I like to talk. I like to debate. Had I been around at the forming of this country, I probably would have loved to talk about the democracy and the direction of the country and have in-depth discourse about why certain things matter. Because if we all just get in line, we become automatons. And if there aren't passionate people to essentially move forward or improve ideas, we don't progress. We don't. And that's really, really boring. So I would rather have people around me that challenge me in an intelligent way than have a bunch of dummies that go, yeah, whatever you say, dude. Whatever you say, that's dangerous. Um, Now, some caveats. If I'm a better trader than you, and all you want to do is challenge me about everything and you're brand new, well, then you waste my time, right? But if you have some experience and you've demonstrated that what you do works, and maybe even if what you do doesn't work, but you demonstrate understanding, well, then I want to talk to you all day long. But if you just want to argue for the sake of arguing, well, at some point I'm going to obviously say, not worth it. Hey, Brian Davila. Nice to have you in the chat again, my friend. Let's see. You've heard good things about TikTok? That's cool. Let's see. How do you use Sierra Chart? An instance solution for DOMs and charting to prevent much CPU stress on single threads. So Alfred, I've done a video on this, and it's like Sierra Chart tips and tricks. Might be 6 or 7. It's in the Sierra Chart I guess playlist. I'm trying to use I want to say folder. It's in the Sierra Chart folder, but essentially you just need to have multiple instances if you're in Windows, because it'll then use multiple threads or cores of your CPU, assuming you've got enough threads in like a 4 or 8 core CPU or processor, I should say. Same thing, but you should be using multiple instances. So that's the technically right answer, I think. Then there are a bunch of things, and I link or show folks where to look on the Sierra Chart support board for their documentation on performance. And they have a whole page with multiple threads and multiple, I guess, subheadings that address all the variations of what people do to cause performance issues. People do circular chart references. They do study references where source charts reference multiple destination charts from the same single source, and it causes reloading of charts. So that causes issues, right? So there's things like that you can read about. Here we go. New highs. New highs. Look at that profit taking. Probably going to go much higher. Are you still long, Dirk? Are you still long, Mr. Dirk? Anyway, all my videos have a little link to, if you guys are interested, like let's say some of you guys are not Sierra Chart people. If you're interested in signing up to Sierra Chart, if you just use my link, it's a referral link. It won't cost you anything, one. And it'll help me out a little bit in that whatever you pay for to Sierra Chart, 10% of that gets added to my usage time. So in other words, here I am, a nice guy helping people out with Sierra Chart. If you sign up to Sierra Chart, I don't get paid per se, but I don't have to quite pay for as long or as much when my usage time for the software comes due. They'll extend it by a little bit of time. So anyway, if you guys don't mind, if you're watching this and you're not on Sierra Chart, if you use that referral link, it kind of helps me out. So, things like that are encouraging for somebody like me who just kind of shares Sierra chart knowledge and tries to help you guys out with trading. It's encouraging to me, and it definitely gives me a little kick in the butt to want to put out more videos and stuff like that. So, again, I don't get paid from it. It just extends my usage time a little bit. It doesn't cost you guys anything. So, I'm thinking about the next. Oh, did it? Error 404? 404? So, Village Idiot Garrett says, bummer. That's okay, Dirk. Nice trade anyway. Um, Link showed error 404? Really? I'm on a treadmill, John Vic. Yeah. Oh, here we go. That link has been shortened. Oh, I'll go fix them. That sucks. Whatever. I'll go fix the links. Sometimes when you copy and paste stuff in YouTube, yeah, when you copy and yeah, go to main page then about on for me. But you copy paste into the YouTube like links into like the video descriptions, they automatically like shorten up the link. So I've got to go fix it. Whatever. I do this stuff really fast. I'm like, oh, cool. There's something like that. That could help me. That's cool. Help me to feel more encouraged to want to do all this stuff in my off time. Because that's the struggle, right? You kind of do some of these help videos, and then, after a while, people are like, oh, that's just what he does, and then you think to yourself, oh, look at this cell. This is something. This is aggressive. Very little contracts are moving this market to the downside. The bid is falling away rapidly. And they're pulling the bid as it goes down in price, by the way. Yeah, thank you, Panama. I appreciate that. So this is what we're talking about. If you have pulling and stacking turned on right now on your DOM, this is a really great example of how liquidity providers are pulling the bid as price drops into every bid level. They're pulling it. They're not pulling it before price is there. They're pulling it as price goes in, and retail's buying this pullback and getting and already got run over, essentially. So you can see on the footprint as we move down in price, you see these super low volumes, 51, 35, 94, right? 32, 70. You could see in real time that we're spurting down in price on no volume, right? And it's just taking so in other words, it's taking very little volume to move price all the way through an area that previously had consolidative volume. So whether that's a news blurb or something Bostic said, or we don't know, but if you're an order flow person, you're looking at this going, huh, this is different than what's happening all day, right? Look at them pulling the bid and price moving very quickly. Maybe you recognize that as an order flow person as short term, I can scalp with the direction of this move. Usually I can. Chris Gardner, that's really cool. I know some people that have really focused on plotting, pulling, and stacking. I think Zip of Atkins Indicators has been working on something for that, but everything I use with Sierra Chart is kind of out of box. But I have no doubt that it's probably pretty sweet. So what are we up? $400 here, maybe? 20, 40, 6 times 5, 300. No, 350. 350 on the micros for what? an hour and a half. Doesn't feel, it feels like 3.5 hours to me right now, guys. Feels like I've been doing this all day. Little tired. It's usually, yeah, being a little, trying to be a little more aware of my sleep patterns and stuff. Thinking back, I didn't get the best sleep. Maybe ate slightly too late last night, so I don't feel super energetic. So yeah, this market's going down here on very low volume, starting to pick up through here in real time. See that? But there's now resting liquidity here, which is affecting the rest of the order book. Folks buying above the resting liquidity. So short term, you can think of it as this. A lot of pooling going on here. And then now there's resting liquidity. And that's changing the behavior of the players that want to buy ahead of the resting liquidity. Because there was no resting liquidity up through here, right? And that's different. Now there's resting liquidity. What do you think is going to happen? So just a little bit of resting. Do you think they're going to blow through that? Keep going? Let's see. There's more resting liquidity. This is MBO. These are order sizes down here. Low volume node, breakout zone. We're right here. Longs from here are under duress. So there's no initiators right now in the market. Down we go. Just blew through it. Some 50 lots up there, 2 of them. Back to back. And a 20 lot above now. A little bit of liquidity. And 18 and 20 and 10 and 10 up higher. So let's see. There's a 20 lot looking to get long here. They're going to chase. There's a 50. So you see this. You see the 50 lot fill right there? You see that 50 lot fill right here? And then a 50 lot came back in on the bid immediately. That is one sneaky player. 50 times $12.50. Don't tell me that people don't like to make 50 times $12.50. What is it really? Maybe $9. So 50 times 9. Okay, let's go 50 times 10 because they have a seat on the CME. Right? 50 times 10. $500. In what? 3 seconds? Isn't that funny? Did you see it? Did you guys see it in real time here on this footprint up here? 50. There was 2 stack 50s. One of them filled completely. And then they came back on the bid and filled. And they immediately gobbled it up. And you saw it on time and sales. Bing! The 50, the 50. Isn't that great? See how MBO kind of helps you a little bit? I wish Sierra Chart did the MBO or exposed all the data on the MBO, right? And then that way coders could come in and write true iceberg detector studies for Sierra Chart. Maybe it's coming. They just need to buy some more servers because the I've read most of the threads on the support board. I just keep up with it. It's one of my downtime things that I do is I just read through things. Especially when Sierra Chart's involved, talking about latest and greatest data feeds, etc. And they've long talked about MBO and how it's a little bit data intensive. So, in other words, they don't have quite enough servers right now immediately to justify the potential slowdown of data by giving everyone all of the MBO data. But maybe they can do that, and then with a little bit of foresight, they can announce it to the world and say, hey guys, we have more data now available, and look, using this data, you can now code some really cool things using it, unique order IDs, etc. And now they can compete with Bookmap. You ever think about that, Sierra Chart? Right? Instead of putting Market Delta out of business, maybe you'll put Bookmap out of business. And then maybe you'll work a little bit on the market depth historical graph and do something snazzy like Bookmap has done, where the relative depth works very easily out of box. And so you can, using a slider, right, or a preset numbering system, 1 through 20 sensitivity for brightness, right? So something like that. Put it in your documentation if you don't want to limit users. 1 through 20, that's the maximum. You can actually have this heat map that is something similar to motive wave, where they have just a little slider or something up on the control bar, and then you could just slide your market for your settings on market depth historical graph so that it's more or less sensitive. Wouldn't that be sweet, right? And then you could just have buttons, boom. Buttons or a little slider up on your control bar, and we would all have iceberg studies, and we could configure that with some text, with thresholds, using the market by order, unique order ID data. Oh, baby. And then your user base will expand massively. Massively, I tell you. Because people love Bookmap, and you can do it for less money, have more historical data, have better uptime, all with the charting platform that does way more than Bookmap will ever do, and with more stability. You guys see the vision? Come on, do it! Do it! What's up, Rainer? How are you, my friend? You know, Sierra Chart's offering their own data. Why wouldn't Sierra Chart focus on their own data when they know how to integrate it? It's like CQG saying, "Hey, you want to use Rhythmic? Hey, we have our own software, we have our own infrastructure, but you want to use Denali with our software?" I don't know. It doesn't make sense for CQG. They want to be able to control the variables. They change something, it doesn't break. Because you know, Sierra Chart, what do? They change something, or Rhythmic changes something, probably Rhythmic, or one of these other data providers, DTN, CQG. They change something, right? Trading technologies, they change something, and it breaks it on the Sierra Chart side. Now, does Sierra Chart control those variables? No. They're left reacting. They're left with, hey, our users have to tell us, and by that time, we already get the stink eye from our users. So it's not optimal for Sierra Chart to use all these other data providers. However, some of these other data providers have more infrastructure, and Sierra Chart is left going, well, it's really expensive for us to connect to Hong Kong or a lot of these other exchanges globally. And so you're left with, hey, CQG does it, right? Because they have a data infrastructure through all these exchanges, right? Options and futures options, stuff like FOPs essentially, and then like Hong Kong, or I know Sierra Chart has Eurex now, but you know, for a while they didn't. So they need them if they're going to offer as many markets, right? So they're always going to have some offering if they want. They're always going to have to connect to some other data, as long as those data providers do routings and other things like, you know, interactive brokers, stuff like that. That's a whole game. That's a big, big, big game to do options. Like Sierra Chart, software doesn't even have an option chain, right? Natively built into it. You can't expect option traders to actually use a platform without an option chain, right? Yeah, Rainer. I haven't made too many trades here. It's been a little hectic. A lot of this is hindsight. I need to switch this up and make it look about like this. Nice to see the numbers, but I think more important is to get the big picture right now, not be all zoomed in here and have a clear view of the numbers. You guys want to see my TPOs? Sorry if I'm missing some comments. John Vick, yeah, I do. I'm on a treadmill a lot of the times when I'm trading. It allows me to trade for a longer amount of time because it gets oxygen to my brain, and instead of wanting to fall asleep here at the computer after 4 or 5 hours of trading, if I'm walking, I have a natural high. So yeah, it does help quite a bit. Um, Hello, brown dog. Let's see. Greetings from Afghanistan. Cool. That's crazy, G Trade. So G Trader, Lord of Skies. Are you in Afghanistan because you are native, or are you there? Um, I don't know. I was going to use some kind of crazy sounding term. G Trader, Lord of Skies. Are you an infidel? How about that? Brown dog. MBO showing. Oh, you're in. Oh, that's right. You are in Cali. I can't remember all this stuff, G Trader. Sorry. MBO, I think, only shows more than 3. I think that's right. I don't know. I'd Google that or look it up on the Sierra Chart support board because I do believe that they were changing that. It used to be something higher than 3, and I think they made it 2, maybe even 1 on certain things. And then they were testing out how much data it used, so they were trying to optimize how much data people were going to pool versus who actually used what. So maybe they have maybe they ended it. Maybe they decided on 3. I don't know, but maybe it is actually less. So I'm not aware. I for MBO on ES I use 10 or greater, and then for NQ I use 5 or greater. So it doesn't matter to me. So that's why you see all these 6 and 5s, and then anything bigger on the NASDAQ here on the right side. See that? 5. And then on the E-mini you see 10s or more. I don't really care about 5 lots. I don't really care about 9 lots. Just don't care. Look at how those 10 and 20 moved up. You see that? And bought right here. What do you think? Are they covering a short or are they going long? What do you think? Anyway, let's see. Oh, G Trader. Yeah, Lord of Skies. That was you. I'm not on Windows. I'm on Linux. Now, didn't somebody have a question about Linux? Yeah, they did. And I read it earlier and then I got sidetracked. So, someone had a question about Linux, and the question had, I'm not going to scroll up, but it had something to do with, Linux gave them headaches, and why did you settle on Linux versus Windows? So, I settled on Linux because someone suggested to me that I use it, and so I gave it a shot, and it was difficult at first, but I'm a pit bull. Once I get it in my mouth, I keep biting until I figure it out. And I'm also brand new to Linux, so keep that in mind. And I'm old. I'm 42. So maybe my technology skills are limited, but I can use Google. And I read, so I do understand. But it didn't come very naturally for me to set up the operating system. And so once I finally got everything set up correctly, I got my kernels updated, I got my monitors working correctly, got my drivers updated, I got versions of Wine, which is a programs within it in Linux. Once I got Wine set up and set up with the version that worked, and then I loaded Sierra Chart and I was able to open it with Wine correctly in the right folders. There was a learning curve to all of that. Um, right away, I noticed my TPO charts, which I load a fair amount of data in, they were no longer lagging. I noticed my DOM seemed way faster. I was like, what the heck is going on? This is a software, or this is an operating system that Sierra Chart is not directly designed for, and I'm running Wine, and the DOM has got zero lag to it. Well, I mean, zero, everything's got lag, but comparatively, I was like, this thing is just hopping around, changing numbers like I've never seen before. And so then the person, now I had put everything into Linux the same way that I had it on my Windows partition, which is a separate DOM instance, sub-instances for charting, but execution was on its own instance. And then everything else was sub-instances in Windows, right? And that worked okay. It worked fairly well. And then I did tried to do that on Breakout. Tried to do that on Linux, and it didn't like all the sub instances. They took too long. Some of them would take with Wine, some wouldn't. And so when I mentioned that to the person that got me onto Linux, they said, oh, just dump it all into one instance. So I did that, and immediately everything went from like B plus to like A plus plus. I've never seen performance in Sierra Chart like that. So now everything is on one instance, my DOMs, my charts, everything. Which is how I'm able to share all my drawings very easily between any chart. So my drawings go from higher time frame to lower time frame, and then all into my DOM. So my DOM, which has on the left side, sort of the left side of the last or first column on the left side of the DOM, is your region 1 for a chart. Sorry, I'm looking here. I'm a little late here. Damn it. Yeah, I'm late. I'm out. Bummer. Girl's just crying. She whenever I pick her up, she stops crying. So I always wanna, not always, but when I know my wife's got my 4-year-old out there, she made me a nice breakfast. She's probably dealing with the 4-year-old. The little girl's been crying for 5 minutes, struggling to go down to on her nap. I do want to go out there and give her a hand. And she had a rough night with the baby last night. I was up a few times, taking her out of the master bedroom into the rocking chair and rocking her to sleep, then giving her back to the wife, and then going back to bed. So, hence why I got a little less good sleep last night, but that's okay. My wife was in a much worse situation. So anyway, I went on to Linux, put everything all in one full instance, right? And then it all just worked like a charm. Like, no delays. I share drawings from all of my higher time frame charts, overlay them into the region 1 space, which is the space to the left of the first left-hand column on your DOM. And so all my levels then show up on the DOM, they show up on charts. And that's nice, because with sub-instances, you don't get that. Yeah, I really wanted to get short right into this node, and when this closed at the highs, I wanted to get short here. Um, and I couldn't do it on the E-mini. I did a little bit on the NASDAQ, but I didn't like the fact that we've had no retracement. But now this is turning into, this could have been a runner. This is one of those lower highs and then full rejection. When we take it out under the lows here, then the longs are going to give up for the afternoon. So just FYI. Inside day playing out. Very nice. Kicking myself a little bit here, guys. Feel like I missed a trade. Bummer. Bummer, bummer, bummer. Anyway, talking. Let's see. Man. That is such a pisser. Such a pisser. Alright. Da, 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 da. Da, 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 da. Oh, thank you, G Trader. We're so biased. Babies can come out and for a few months be really ugly, but yet the parents think, oh, they're so cute. And then people who haven't had babies go, man, that thing's ugly. That's just the truth. It's funny. Oh, short A. You don't get completely short hair. Just give it a little bit of room to do something, right? We both talk about it. It's pretty funny. I don't know. Let's see. Hold on. Oh, stop tick up. Come on. Really? Oh, it's because it's not attached. Okay. Oh, that works. Okay. More shekels. Soulmates. No, I mean it's just we're pretty we can say things that sound really mean, but we don't intend them to be mean. It's like this is just how young parents bias, right? We're just aware of our biases and we're like, of course we're going to think our kid is super cute because we love them, you know? But objectively, some of them are just ugly, you know? They just are. But, that's you're not supposed to say that publicly. I'm just saying that here on a stream and I'm not around any uh parents who have newborns. I don't know. Looking, looking, looking. What? Looking, looking, looking. How fast can you go? Oh, oh, oh. Nobody knows. You see that? Little scalps, no stops. What? How do you do that? Well, prices just oscillate in certain ways, that's all. Some of these trades are just experience trades. That's all they are. Cancel that one. And I'm on the puny little micros, so I'm not that worried about it. Like, but it could fall 500, or not 500. It could fall 100 points. Yeah, you know what? 100 points on the MNQs is $200. Who cares? Who freaking cares? It's not a big deal. The right thing to do is always have a stop in, especially if you've been trading not very long. So, what I'm doing now, don't do what I'm doing. I'm being a little bit lazy here. All right, let's go. What distro do I use? Says 48 player. I use Mint Cinnamon. So I use 20.3. See, I could barely even remember that it was 20.3. But yeah, I'm using Mint Cinnamon 23. It's fast. It's really fast. And that's how I get all these dark screens to look the way I do. So like, for example, you notice if I click on this NASDAQ screen, you see that bright little blue illuminate the edges? I can control that through wine. So if you're like in the terminal in Linux and you type in wine CFG in the terminal, it's like a command line for Windows. So if you type in wine CFG, it's like wine configure is what it stands for. And it'll bring up this dialog box and you can adjust all your colors, like your headers, your outlines, your menus. That's how I get everything looking like this, right? It's like even the fact that this is blue right here. You see that? The background colors, the white, right? Even the shading down here, I configured that shading to look like that. All of it. I can make this darker. Right here, I can make it match up here. Or I could make it black even, right? I can set the toolbar. However, it's pretty sweet, guys. Anyway, so, and then, like, basically everything you can configure. So that way, if you're going in, because you know how with Windows, with Penumbra, right? You hit Control, Delete, and you go to your task manager. It'll like reset the colors of your Sierra chart. You guys ever run into that? You're like, what's my computer performance like? Go into your task manager. Damn it! I gotta reset this stupid Penumbra or whatever it is, right? I was using something else, not Penumbra. I was using, I don't know. I paid $5 or $10 to someone who did I can't remember the name. Graphics. Had a whole graphics pack, and then I installed something that looked like Ubuntu. And so all my Windows graphics looked like I was in Ubuntu. So it was nice, like orange and whatever. But now I'm actually in Linux and I like it. But, I'll never do a Linux tutorial. Unix, UNIX Maniac. He's on YouTube, has done tutorials for that, so go to him for that. Sierra Chart officially does not support Linux. They say don't do it. Other users on the Linux thread on Sierra Chart support board, other more experienced users say don't do it. It's not designed for. Sierra Chart is not designed for Linux, it's designed for Windows. That's what Sierra Chart will give you support on. So don't do it. Just don't do it. Right? Do as I say, not as I do. I will usually tell you the right thing to do, even with trading. Now, do I always do the right thing? Probably technically not. I mean, I don't make the big mistakes. I don't YOLO my account. But are my stops always in the right spot? No. But is my size small enough to where I'm not really sweating it? Yeah. Will I stop out um, around a certain zone still? Yeah, I will. I surely will. Uh, got all those stops up there. Come on. Bing. Bing. Pool. Pool and stack. Oh, thanks, 48 player. They're I'm liking them. I'm very happy being on Linux. Like very, very, very happy. Very happy boy. Bing. All right. Above 100 points on the micro Nasdaqs here. You're like, but why did you go short? It's price action. We made a higher high here and rejected and came back. We're now um, hovering below this candle low. And so the normal thing would be to go take out this candle low. So just a price action thing. That's the only reason I did this. The market demonstrated weakness, and on any pullback into this volume node here, I wanted to be short for a break of this candle low here. That's it. So just a price action scalp, ladies and gentlemen. So R. Lacey says, looking to see how trapped shorts react at 39.55 for a long. Let's take a look. You're talking about that here. Yeah, I like it. I like it. R. Lacey even using the trapped terminology. Trapped shorts! Yes! I like it. I like it a lot. They're going towards liquidity. See the 100 lots that just filled up there? They're going to go fill another 100 here at 39.59. Why? Breaking out of balance. The 100 lots is nothing. Right? They've even built up a volume node in the short term. Watch. Here. Look, you see this? You see that amount of contracts here? It's like 600 contracts. And people are worried about the 100 lot here. There's 600 contracts absorbed here at 60 in real time, guys. Now there's a buyer and a seller. So someone's hitting that absorption on the ask. But short term, that 100 lot is nothing. Anyway. Brown Doug says, one of the cool things about SC is they allow us to actually save market order book by using relay server, I think. Yeah, I don't know. The MBO, they probably do, but you know, whenever you record that data, it takes up a lot of space. If you've ever transferred Sierra chart from file to file, and you have like gigabytes upon gigabytes in there, the big files are all of the SCID files, which are it's the market depth records, I think. I think it's those. They just take up so much space. So, I mean, if you really want to go back and use them, then great. But I wouldn't just be like, oh, I want everything. You do need to think about, is your hard drive going to fill up? Is that going to slow things down? I think I have 2 or 4 terabytes, can't remember which, on this PC. And they're the, I don't know, they're the faster ones. Forgot what they're called. Something .2 or something. But even then, I kind of think about it. I'm like, do I really want to have all of that being recorded? Does it really matter? For me, luckily, it doesn't. But for a lot of people who do a lot of backtesting and have automated strategies and stuff like that, it does kind of matter. So, I don't know. Harlem Trade says, 42, you're young. Come on. All right. Thank you, sir. Uh, I'm using market profile right now. You guys want to see the market profile? So Daniel Yefrenov asks, when would you use market profile? It's always up. But here's if he's ask if he's asking, let's see here, TPO charts. Hey, the TPO chart even has the heads up. See, I got fancy this weekend, guys. I got a little fancy. All right. So here it is. You notice the green E-mini? All right. Get rid of that one. Here's the weekly. The weekly one. Red TPO, green volume by or volume point of controls. Again, we've got the theme going. Theme it, baby. 1, 2, 3. Okay, NQ. NQ blue. Just like the footprint, right? Anyway. Let's go back here. Shoop. So anyway, NQ blue, ES green. A little easier for me. My old guy brain was just struggling with being on the wrong chart sometimes. And I like to change colors up. You know me. I just like to do it. This is my trading is like my office space, right? What do you do if you're doing well in a skyrise in an office, but you get bored of what you're seeing every day? You update it a little bit, right? Now, some people are like, I want to come into the same thing every day. I know where everything is. It looks a certain way. Good for you. I'm a little bit more of a designer. I like to come in, see the colors are a little bit different. It makes me feel differently. Makes me feel a little bit excited about working in I don't know, a different environment. Do what works for you, I guess. All right. All right. You know, I do. I just want to start slinging contracts right now. You know, it's time for a little bit of sitting on hands. It's time for ask it again, G Trader. I don't know what your old comment is. Hey, thanks, Alex Lee. The only thing that's really improved are some of the descriptions, the quote board, heads up, and the colors are a little different. But I do colors probably every few months. I'll make a little change. So whatever. Okay. I don't know. It's up to you guys to tell me something to get me going in a direction, because I'm running out of juice here. Actually, I'm gonna go get water. I'll be right back. Chris, 697. You know, it's amazing. You can always change something, some little thing. For example, notice this is go. So notice on each of these charts, right? Do you see on this left side, my zero prints are both green? Well, maybe they shouldn't both be green, because the green is with the theme of the ES. So I had put zero prints as another color. I think we tried yellow, we left orange. I tried white, bright white. I tried black. And it just didn't look right. I wanted to be able to see the zero prints, and I thought, man, this green color is kind of nice. It really pops on this left side. But one day, I may try something for these zero prints. Like, I might get a color in there Um, Not yellow. I've tried yellow. I've had yellow in the past, so that yellow's old for me. I used yellow for years on this. But I may find a color that works and it's going to look really nice. I don't know. Right? And then notice the numbers, the volume numbers. When it's really bright, you can't see them. Now, do you care really? Nah, not really. But maybe if I went slightly darker, the darker gray would pop on the really light blue on this right side, the volume. But then it would be lost in translation when I had anything behind it that was this color. So then maybe one day I change this hue to something else. Maybe I make all of these white with blue being the highlight, but I make it to where I'm a little more careful when it goes from white. It goes from a white to then another color that then this gray also works with. So I'll be a little more considerate. I don't know. Yeah, GTrader, that's it. TPO charts to yearly. You need to, if you're going to do a yearly chart, you need to change the tick size to about 8 ticks or 12 ticks. So it's kind of like your Binance feed. If you guys know anything about crypto charting on Sierra chart, Binance in their AP. So actually, I'll be right back, and then remind me to explain to you guys what goes on with Binance, because it's interesting both from a trader's perspective and from a data perspective, because I know things about it. So just remind me if I forget. I'll be right back. I need to drink water. Whew, it is hot in here. My little girl is so cute. All right. Binance. So Binance's API allows for multiple decimal places to the right of the, or multiple digits to the right of the last decimal places. So for example, Bitcoin is trading 30,000 point 4444 on Binance. The increment you can trade on Binance is the fourth digit to the right of the decimal place, which is what is it? One, tens, hundreds, thousandths place, right? The API allows 6 digits to the right of the last decimal place. That is so that professional players can front run all the newbies that trade on the Binance app itself. So they can you'll think I'm at the front of the book. Let's say I'm buying 30,000.4444, right? They're actually front running you through an API 4444 1, and they're filling, and you're like, how the hell am I not filling? Well, that's what Binance does, right? They partner with market makers and professional traders, and then they allow the API more digits to the right. So the Sierra chart connects through the API. That's the data feed. So in the Sierra chart software, when it comes in, it's 6 digits. That's way too many digits. Because now when you have a volume by price study, it's trying to calculate, you know, 2 or 3 placements over. So it's way too much data to try and calculate. And in many of all of those transactions are occurring at separate ticks to the 6th decimal place. Yet on the Binance API or Binance web-based software, it's 4. So when you're in Sierra chart and they're using the API data, you have way too many calculations going on. So it's the same idea for a TPO chart. If you're using a yearly TPO and you're aggregating 4 ticks, first of all, do you really care about a single point over a year? No, you should not. You probably care about 4 or 5 points aggregation, and that's it, right? So bump that from 4 ticks to like 20 ticks or 16 ticks, and then you should see your performance. Thus, the volume by price study and the TPO calculation, you should see that improve drastically. And for the Binance, do the same thing, right? So instead of like your tick increment being 0.00001, make it 0.01. Or make it 1. Because you really care about, I don't know, 1,000th of a penny with Bitcoin for the volume profile? No, you care about maybe $1 or even $5 or $10. Maybe. That's what you do. And don't apply the volume by price study before you've made that tick setting change. So do that in the chart settings for that symbol. Yeah, disciplined. I've noticed that before. Isn't that crazy? 8 tick. Yeah, use 20. Your PC is being powered by rats, G Trader. You got to get out of San Francisco, my friend. Oh. Best mineral water, Trader Joe's by far. I've tried them all. Sorry for all the drinking noises, but you know, you guys wanted a more sensitive mic. Now you got one. Like, turn it off, bite me. Okay, here we go. Market making moves here. 12:40, 20 minutes left. Let's get our bearings here. Hey, Simsum. Nice to see you here. Doesn't matter. Yearly, use 20. 1620. Try it and see what happens. Anyway, G Trader, that's what I suggest. If not, if it's still not working, then I don't know what to tell you, man. I don't know. Take it to the Sierra Chart Support Board. Those engineers that are paid to help you. They might be able to. They might know something about it, and they'll probably ask you to share your chart book. You just share it as a private file. It's all good. Do it up front. Share it up front in your post. Set it to private. Ask for help. Hey, what do you guys see about this? Moving to Texas or Afghanistan? Because there's no big difference between the two, right? 20 minutes left. I want to short this area just for a little return, but this is about the area you get boned on this kind of day. You think you start getting lulled to sleep by these little footprints, and you lose track of the fact that it's 18 minutes until the close, and your little footprints aren't really going to matter anymore. So guess what? Superpower time. SOH. SOH. Lacey. Our Lacey. Is that all you got? 58s? You still. So here's the question for if you're still around, our Lacey. At 55, we've got this ledge, trap shorts. Do you still want it if it is trickling down to that zone? Do you still want it? And why? If yes, why? If no, why? In other words, does how we get there matter to you? Yeah, some, maybe. Here, I need to change this here. Hmm. All right. Streaming. All right. So the Sierra chart referral thing is now in the excuse me, in the description. 6178 in points and 105. So 210 and 305. $505 profit. All right. Plus profit. Already making this stream done. What are you gonna do? Plus 500 plus profit. Okay, done. Save. All right, let's see what our Lacey says. Appraiser guy, I'm with you on that. So here's the reason why I'm less inclined to buy based on the structure. So what you're looking at, right, is this level, right? And we're saying 55 is extremely high delta, where shorts were wrong, right? It may be reactive, but here's what's happening. We're getting volume, 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 and now more volume. So essentially, as we bounce above this area, they're selling it on volume. So you're getting trap traders both directions. So you're not getting some big extension from, say, volume is up here. Let's say volume's up here, and you get a move down. And then you have prior structure volume. And then it slows down, goes sideways, doesn't make a big move up. Then you can take defined risk. But instead, volume's migrating, migrating, migrating. Now the same area as the volume node. So there's volume here. So the amount of movement to potentially bounce from this volume back up to a higher volume node that holds shorts who are right, who thus, as you cross 50%, want to increasingly cover to get out at break even, the distance between here and up here is less. Because you're now talking about a distance between essentially here and right here. So if you're long here and your stop is down here, you're getting out here, your risk reward is worse. See that? It's a weird way to look at it. Well, maybe. But that's sort of the volume, the mechanical way of thinking about trapped traders kind of way to look at it. And it works. It works repeatedly. So here we are, 55. Look. A little bit of short-term volume at 55. And now we're below it. I don't know. Did it bounce here up to this node and that's it? I don't know how it started. Yeah, kind of, Simsum. I mean, it's the idea of who's, right? It's the idea of a volume profile like this, essentially. And where this volume profile represents, and then trap traders, right? This is the 55 handle here, right? Here. And it represents this, and there was big deltas, and then price moves up, right? And then it does all this other stuff, and then whoosh, you get a break all the way to here. You have trap traders, trap traders, trap traders. Profitable traders up here too. So any covering, because it's a great distance, will induce profitable traders to cover by. It bounces higher. They're still profitable generally from a volume node that's higher, thus bigger bounce, thus greater probability of entry here, profit taking here, stop here. See how the risk reward is 2 to 1 R's, right? So if your entry is this line, this is number 1 exit, here's number 2 exit, and this is your stop, you see how this gets you 2 R's potentially, or 1.5 if you have one out here and one out here, and maybe even one out here if you're lucky. Because what do markets that rip down and then make big bounces do? They tend to what? Overextend, and let's see, this is the same market. Overextend, and then come back to what? BBWC. And then, whoop, 50 line. Another bounce. 50 line, another bounce. Oh, hey, now we have a bull flag, right? This is how markets move. But they move from point A to point B because of big moves. That's why because of volume nodes, which represent what? Traders in certain positions. Anyway, that was the murder algo right now. Rebalancing algo. Yeah, Praiser guy. I think that's cool. Good. I mean, I think of them as individual traders, and how are they positioned? If the ones that are positioned from a node above are wrong, how does price move into out of that area? If they're right, what do those traders do who are right? So if they're right, and there's a lot of them, but they're all out of bullets, right? They can't add to their position. What do if they think they're right? They don't buy. Let's say they're going short. What do? They don't buy is what they do. Okay? What do the traders that are wrong from there, let's say they're long from higher in a volume node, what do if they think they're wrong now? They sell to get out. Now, as price moves faster and faster from that zone, the ones that are right, what are they going to start to do? They're going to buy. Where are they likely going to buy if they're smart? They're going to try and buy into or above the area that held players who were wrong a while back in the market and who haven't had a chance to get out at break even. Thus, that's where I look to get into the market and play on traders who naturally want to get out of positions and who are buying or selling against trapped traders. So hopefully that helps. When you think of it that way, it makes perfect sense why price moves the way it does. Not only is it why price moves the way, it's what actually happens. If you've ever been an idiot in the market and shorted an area only to hold your position underwater because people love not to take their stops. People hate admitting that they're wrong. It's the human condition, right? I believe in Muhammad. I can't be wrong. I believe in Jesus. I can't be wrong, right? I believe in Krishna. I can't be wrong. I don't believe there's a God. There's no God. I can't be wrong, right? And what do? When we have that steadfast belief that we have tied to actual benefit or not, we amass the evidence to support our thesis. And we don't want to admit that maybe there's bad evidence for any one of those positions or beliefs. People do the exact same thing in the stock. I mean, it's human condition. This is not a religious argument. This is about trading. It's the human condition. The human condition is I don't want to admit I'm wrong. That hurts because I devalue myself, or so the internal story goes. I devalue myself if I admit I'm failing. So I don't want to take this loss. I don't want to take this quote-unquote failure and feel bad about myself. If I just hold on, maybe the evidence will start to shift, right? And if you take the analogy further, right, maybe from religion or from any of these daily experiences, these are the things that we look at and say, well, I pray to this God, and half my prayers aren't answered, and then half are answered. And so we look at the ones that are answered and we say, that can't be coincidence. Taking the analogy further, right? So trading is the same way. We go, I hope. Oh, wow, I see some weakness up here. I'll hold on. Right? Yeah, that couldn't have been coincidence. Weak market. Bias. And then you get close to about break even. Oh, I've been in pain for 4 hours today. I'm going to cut it right here. Right? When is it the hardest time to hold it when you got to go bathroom? When is it? Is it when you're an hour away from home? Sometimes, yes. But when you know you have an hour of driving, your brain calculates forward and it goes, you better hold it. Otherwise, you're going to be really uncomfortable in your seat, sitting in your own piss and crap. But you get about a minute from home, you start to relax. And then you go, oh, I gotta go. And then you start walking through the door and you're like, everybody out of my way, I gotta go bathroom. And you book it. And sometimes you're like, I almost made a mess. That's your brain calculating forward. Traders do the same thing when it comes back to break even. Human condition. That's why I say trade against people's animal instincts to do the wrong thing at the wrong freaking time. And you will transform your trading. You will transform your trading. Razor guy, I hope you're okay, buddy. So trading is not so hard when you understand the human condition and when you're Can't believe I just said trading is not so hard. The caveat, the trading is not so hard when you can be aware of your own condition. And then clearly start to look at where other traders are getting hurt. And just know that what you eventually conclude by viewing the market this way will fly directly in the face of what most gurus and what most commonly is taught as good technical trading. And once you realize that and start taking those trades, you'll be on the opposite side of most retail traders. But getting to that point is effing hard. So the caveat is, trading is not so hard if you can understand this and apply it. But that is very hard. So if that's good trading, then yes, it is hard by extension. But, well, whatever. Anyway, we're getting down to the last 2 minutes here. Hope my mic is not too loud. Constantly, OBS is telling me you are way too loud. It's lighting up in the 10 decibels level, saying you're way too freaking loud. So I haven't seen anybody complaining about my mic, but OBS is telling me, bad mic, bad. You guys know, I just want to start clicking on the DOM right now. I just want to start taking positions. Seriously, I just want to click. I want to short like 20 micros right now. Okay, cool. Yeah, GP. Hey, GP. Nice to see you in the chat. Good. Glad to hear it. That's the truth. The truth is I just want to start smashing the sell button here. Because it's gone up. That's no reason to take a short. Not in a sideways market. That's made a higher low into the close. Little extension right into the close will get everybody bullish today. Closing on highs. That'd be the Max Payne setup. Anyway, look at that. Look at that order book fill in. Right before settlement. Settlement in 6, 5, 4, 3, 2, 1. Watch the orders go. Oh yeah, let's go. All right. You see that? All right, watch it. This is the heads up. Let's see these bars start to move in real time as we get close to the 5 seconds. This is low volume right now. See the settlement volume trickling up? Trickling. We're going to know what settlement is before anybody else. Bing! Settlement. 39, 71, 75. You're the first to know settlement, I think. Why? Because we calculated it in real time. Anyway, 30th percentile settlement down here. You see that? Very low. Very low. On highs. So, do we have a trade back to settlement? That's the question. Look. I entered my micro, and they're like, nope, you don't get a fill. You don't get a fill at all. I wanted to short it back to settlement real quick here. Too late. 74s, looks like there's absorption. You see it? Absorption, how it turns this bright color here. It happened quick. See that? And then another one. Boom! Look at me using my footprint for order flow. What? You can't use a footprint for... Yeah, it's delayed order flow. The flow of orders causing this color to be bright. Bite me. All right. Panama, I appreciate it. Yeah. If you do it, if you start to look at the market this way, just see if you can predict what's going to happen first. Right, keep the story in your head, right? Who's long here, who's short here. If we lose this zone here, based on how it's moved today, we're in a neutral day. Um, Based on how it's moved today, well, we're not really in a neutral day, are we? All right, we have an upper distribution today, right? But we have a P-shaped profile today. See if first, before you start losing money trying something, see if it works for you. See if you can identify a strategy before you go try something new. And then, um, you know, then you're not blaming me after going, holy cow, I tried this without backtesting it, and I just lost my shirt. No, just trade your normal way, but try to keep two narratives going. Maybe become a little bit more aware. You can always trade less if you're learning something new, and at least you're not, you know, handing it. So a lot of traders approach trading from the perspective of, well, I need to keep trading to make money. But if you don't have a successful strategy, you're gonna just lose more money the more you trade. So trade less. It'll hurt a lot less bad. I promise you. R. Lacey missed the long. Yeah. Yeah, I guess it worked out, R. Lacey. Good call. Good call. Oh, that's great, Panama. I am super, super happy to hear that. And I would love to hear your guys's interpretation of my own methodology back to me. So if you guys are like, well, I really want to learn this scalping sort of capitulation from node to node, and looking at context of market moves to see who's trapped where, I'd love to hear how you interpret my own methodology, and tell me back how you think it's gonna what price may actually do off of a zone, right? Because essentially, if all we do is look at price after the fact and go, for X, Y, and Z, this is the reason that price went from point A to point B. Well, we're not really any different than any other furu out there that only points it out after the fact. But if you can tell me beforehand and give me a nice rationalized, logical argument, and then price moves in that way to the destination, then maybe it's repeatable, right? So, that's why I do these. That's why I do these online spiels, is because I want to share what will give you some sort of predictive power in the market, right? Too many people show you their setups after they happen, and I'm trying to talk about how price may move ahead of time. And it doesn't mean you know all the movements, but it does mean that you have a plan for if it moves from point A to point B and why. If you could predict that right a lot of times, and the setup gives you good risk reward if you can figure out where to get long, where to put your stop, and where to take profit, and still, oh my gosh, now you're talking, right? So I hope that as you guys start to follow along more, one, I hope you appreciate it. Number two, I hope that you're able to spit it back at me and say, Mike, what you've been talking about is reproducible for me. I understand the concepts now. Here's where I think price is going to move because of what's happening in real time using either price action or a footprint or these rotations, and say, hey, this here's my hypothesis. Now let's test it against market results. Hey, now you have something that you can hang your hat on, I think. Now you have something that you can actually use for, either being profitable or not. But all this garbage that's after the fact, how can it's like, you know, people confuse an explanation with the hypothesis when the market's already made the move. If someone's giving you an explanation of why the market made the move, it's not scientific. It's not a hypothesis anymore. It's an observation of what already happened. You're giving an explanation that may or may not actually apply. So in other words, it's a lot more useful to give an explanation before price moves and then see if it moves the way that you're suggesting it may move. Because that matters too. If I say, well, price is at some point, he's going to cross the 0 line, and at some point it's going to cross the 100 line, and then when it's at the 0 line, I say, well, the target is the 100 line, but it goes negative 20, and then it goes all the way up to 100, and then I turn around and say, hey, I'm right. Well, it doesn't matter that I'm right because I got stopped out because my stop was negative 10 off the 0 line, right? And that's what they people conveniently leave that out. A broken clock is right once a day, guys. As a trader, you need to be able to predict the way price gets there from a zone to a zone. You're like, that's too hard. I just want to buy and put a stop in. That's what you're doing. When you put a stop in, you're saying, below this level, I'm wrong. And at my profit taker, I'm right. And if something comes up between now and then, I can change my mind. But if I'm changing my mind before it gets to my predetermined profit target, then I'm probably skewing how big my wins are versus when I take my losers are. So try not to do that. And that's why having a hypothesis that includes the path or how it should get there is so very important. It's so important, guys. Yeah, Praiser. I mean, I'm pretty good at seeing that. I'm not the best out there, but I would just here. Sorry, let me manage this real quick. La da 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 da. Look at that size come into the book there. You see that? The size on the 100 lot come in and then just get filled right up there. They rebid it. Yeah. There you go. They rebid the 100 lot up there. Right up in here. You see them? There were, right up in here. There was 100 lots here. Just rebid, 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 rebid. Let's see if they go smash these 10s and 11s. May very well come all the way back to settlement. But more shekels. 64.20. There's a certain point here that I'm likely to want to get long again. Hold on. Sometimes you got to go like this to see your footprint correctly after the cash close because there's so much volume. Look, see that? It's all going to look like a straight line, so you got to do this. So probably down in here, 75, 75, maybe even a little, or let's see. They rebid the hundreds. What was it, here and here? Oh, that's interesting. Big absorption relatively from the 100 lots from here to here. So the covering orders. And then faking out people like me short term. Man, poorly, poorly executed on my part. All right, not node. Could have stayed short if I had looked at my footprint like this. Shoulda. And the reason is because they absorbed into the top here. Those 100 lot were just likely covers just to get people, the size player thinking. People who look at size just to get them covering, and it worked on me. It worked on me because I didn't have the full context of what was going on in here. That was really dumb of me. I should have looked at my footprint. I need to adjust my footprint colors here. Right on. Right on, guys. It will help you. My videos will help you, you know. And then read some of the books that I suggested too. But my videos will help. I mean, it's not like I'm not doing this for you guys and showing you in real time. Hey, it kind of works. It works. I mean, here we go. Maybe it'll only work for me. I don't know. Oh, did I just... Am I wrong? Just below? All right. I'm fine with that. You the man, postman. Hey, postman. Are you a real postman? And do you really trade while you're driving a postal carrier thing? If you do, hats off to you, my friend. I saw your follow on Twitter. I was on my phone. I was like, hey, that's an interesting username. And then it said something on your Twitter handle about how you awesome about how you drive a postal vehicle and trade. And I was like, hell yeah, that was awesome. Made my day. Da da da. So where does this node fill in here? Right up here at 77 and a half. Don't like it. I don't like where it's bouncing here. Let's go. One more. Okay. Is it just going to come all the way back to settlement? Rainer, I love it. 80-25. You know, we're on opposite ends of the spectrum here, my friend. Ba-da-da. Bing! I'm out. You know, I can't short against Rainer. Rainer Blanky is a pro trader, you guys. Not messing with Rainer. And I'm out. And I cancel them all. If Rainer says back to settlement, which is down here at the orange here, you freaking short it back to settlement. Yes, sir. Having a hypothesis and trading your plan, it's easier than just most people think. If I knew how to send a picture in chat, I'd show today's P&L. Postman, that's one of the suck things about YouTube is you got to use something like Gayazo, which hosts it for free up to a certain number of images. You know, on a cloud, but I used Gayazo for a long time. So you can do a Gayazo screenshot. I mean, there's a lot of other programs that'll allow that, but Gayazo is really easy. Gyazo. But it's just not. I don't click links in the chat ever. I don't click links in the chat ever. You know why? Because people put some malicious stuff. I get emails that have malicious stuff. So I just don't click links. I'm really careful. So even if people started putting links of their screenshots, I'd never look at not a single one, because I don't have time. But if it's Gayazo and it's not spelt perfectly, right? One of you guys is like, yeah, we're going to put some sort of file onto this guy's PC. Anyway. Well, on point 7, what's the point of anything that's malicious? It's to get something for nothing, right? Why do people steal, right? That's the criminal element. I've been trading over a decade, Kimsta. You know, it depends how you want to hack it, but I started trading when so I'm 42. I made my first few trades and stayed interested in it when I was 21, 22 years old. Yeah, on point. I know. I mean, what are you gonna do? But I've been doing this full time now for a long time. Can you take me in as your trading apprentice, says Kimster? Kimster, you're all ready. This is it. You're here. I'm here on this stream. That's it. I don't do trading. I don't have a prenti anymore. I tried that before, and it was not good for me. It's good for others, but not good for me. Because the hope is you trade somebody, and then you stay connected, and then they help you, and it's really difficult to make someone want to stay with you if they feel like they have the keys to the castle, and you don't always pick the right person. That's another thing too. How do you know if the person you're trading isn't going to turn out to be an ass? So no thanks. No thanks. Pick up what you can while you can is what I say. And obviously the more you guys support me, watch the channel, all of that stuff, just a little bit of support, encouragement, get on chat with me, like the video if you're on, right? That helps. And just say nice things and ask questions and be passionate. The more likely I am to want to do it. And that's enough for me, guys. That is enough for me. This is more for me. This is more of an endeavor of passion rather than some financial opportunity. I talk about this, I feel like, without end, but more than some financial opportunity to sell people something through YouTube or to sell people something. I don't have anything for sale. I don't have chart books for sale. I don't have a trading plan for sale. I don't have signals for sale. I don't have a private Twitter feed for sale. Nothing. This keeps me what's the way to describe this? This keeps me out of trouble when I'm wanting to overtrade. Because I have a difficult time overtrading in front of all of you guys. So at the open, I sling them. I either do well or I don't. And then you guys only get to see what I do between, after the open. Because I can't trade the open and talk. And I don't want to trade full-size E-minis and have you guys know where I'm entering and where I'm exiting. That's the honest truth. If I did that, I'd delay it by 10 minutes or more, and I wouldn't talk. So you wouldn't know. So it'd just be me sharing information. Oh, what kind of size do you play with? Not interested in sharing that. How much money did you make? Not interested in sharing that. So all you guys get, and it's a lot, is me during the times where I have time to talk about the market and share what I know. So it's the best for you guys. Because if I'm trading, when I'm trading size and I'm trading E-minis and NASDAQ contracts, you aren't going to hear me say a thing to you guys because I'm so focused on gathering as much information in real time as I can. So it wouldn't be beneficial to you guys. Many of you would be like, well, share it anyway. I'm curious. Well, I don't care. I don't care. I'm not going to share it because it doesn't benefit me. But this right here, right now, we get to pat each other's back. So as long as you guys pat my back once in a while and say, good job, Mike. Appreciate what you're doing. Blah, blah, blah. Right? Maybe if you want a few questions answered, right? You throw a buck or two into the chat. I'm like, whoa, they actually appreciate me. Great. Do you think that's going to pay my bills? Oh, it's not going to pay my bills. And I'm not looking for that, for it to pay my bills. But it's things like that, right, where a real trader is showing in real time, real information, where someone just offers, right? When I had the Discord, which doesn't exist anymore, there were only a few people that would say, hey, do you want to help with the Discord? Because, I paid for some data feeds, or I paid for, some bot in there to feed stuff into it, or I paid for Nitro out of my own pocket, while all these people benefit from it, by the way. And there were only a few people that said, hey, Mike, I'll donate to that. And I said, don't worry about it. That's not what this is about. It's not a big deal. But the fact that they offered and gave some small thing, inside I was just thinking, you guys get it. I'm willing to share with people who understand what it is I'm sharing and that it's valuable. And that's enough for me. Others would love to monetize this knowledge and share it and charge people for it. And believe me, I have people contacting me saying, you want to monetize this? I'm like, no, not really. It's too much headache for me. I'd rather just make money trading. They're like, you're crazy, man. You could have subs times this and it's free. I'm like, dude, I make money trading. I don't want more complexity in my life. I've got a beautiful family. They see it as opportunity waste. Not me. Not me. And to those who do that, more power to you. Everybody's got to make a living. And if you can offer something to someone and they're willing to pay you for it and they make money off of it, or they learn, they get educated, great. But that's not what I'm about. Anyway. Hey, I appreciate it. John and Rainer and Sim. Yeah, I'm trying. I really enjoy connecting with traders and talking about markets. And like I said, I'm really upfront about the fact that I get on here at this time to prevent myself from trading like a fool, because it's really easy for me to do that thank you very much, Edvinus. It's really for tea. I love tea. Big tea drinker here. I like. Well, I'm gonna get off track, but really, I get online because I've talked about this on in the past. I've had bad experiences where you trade, you get fatigue, you just want to keep clicking buttons. And so this allows me to make some small amount of money. What is it? 70 times 5. 7 times 5 is 7 times 4 is 28. 7 times 5 is 35. So 350 plus 100 points, which is 200, so $550. All right, the stream is still true to its intention, right? 500 plus. Okay. So, 550 bucks for how long have I been on here? 3 hours? It's not a lot of money, but I'm connected to the markets and I'm talking about something that I love, which is the market. I love the market. I love trading. I mean, so here's something about me. I've done jobs that I've hated. And so being a trader and um, having the freedom to operate the way that I want to operate and doing something that the results are mine. I have to own these Wow, Postman, that is very generous, my friend. Anytime you want to ask me a question, you let me know. I will address it. I appreciate that. Um, I can fully control not the results, but I'm fully responsible for what happens every day in these markets. It's all on me. I love that. Because as a person that puts a lot of work into preparing for the market, like you guys saw, if you watched my, Saturday, I think it was Saturday, stream, it's 3 hours where I talked about the market. Now, I did more work after the fact. I did more work than that. All right, Postman. Enjoy your, hopefully you're done. I was here. Yeah. Again, thank you. I really appreciate it. But what was I talking about? Oh, Saturday. So, I spent a whole... Oh, cool, Alex. See, Alex, how does that help you, though, knowing that there's somebody else out there that may be doing a little more than what you are accustomed to, right? So one of the reasons I really love watching Chiavaco Capitals, Chris and Kathy Chiavaco, their streams, is because they put a tremendous amount of work into the technical analysis and the historical analysis side of things. Hey, John, thank you very much. I really appreciate it. And so, Chris and Kathy, any of you guys ever have? I'll remember you guys, I'll look you up. And anytime you guys have questions, I will spit you all the knowledge that I have. Awesome. Yeah, Rainer, I noticed that. By the way, Rainer, because of you, I went and subscribed to. I don't know why I haven't done this. I'm an idiot sometimes. I subscribed to the YouTube Premium. I was like, why have I not spent the $11 or $12 per month to save myself hours upon hours of advertisements? So thank you. That you saying you downloaded it made me think I'm an idiot for not doing this. So totally helps, especially when you have kids and you're putting on like the Dave and Ava like nursery rhymes for your kids, and they're watching that. And they're like, you're like doing something at night, cleaning up the kitchen or whatever. Anyway, I'm getting sidetracked, but Chris and Kathy Chivaco. Chris worked for Morgan Stanley for a long time, or for a while. And so he has some exposure to things that a lot of us maybe have never seen. And so all the various charts that he looks at, breadth and comparisons and ratios, staples to growth, value to growth, tech, he looks at ratio charts. And the way he analyzes and puts it into an Excel file has helped me over the years so much, because it's not that someone is going to come and tell you exactly what to do to be successful in trading. That's not what's going to happen. And that's not what you should be getting from these streams. It's, huh, this person who's demonstrating a success in the market in real time to us uses things that I've never thought of before. And if I can understand how they're using them and how they're applying them and what they're measuring, then perhaps I can add this to my trading and make myself just a little more equipped. So you're kind of like this medical student, right, that goes in and, you have anatomy 1, anatomy 2, you have physiology 1 and 2, and then you got all these various courses through medical school, right, where you're getting into psychology. You take a few courses on that. You take a few courses on pharma, right, pharmaceuticals, and you learn a little bit about that, right? And before you know it, you come out at the end of medical school and you know a lot. And you have all these various tools. Now, you still need to specialize. And you need to get really good at something. Typically, now I say most, big caveat, most general practitioners are not good at everything. There are some doctors, and they are rare birds. They love, love, love to educate themselves continually. And your GP can address whatever it is that you have outside of surgeries, right? They're good at everything. But those are so rare. Most doctors specialize, right? The GP comes and says, "Oh yeah, you got to go see a specialist for that. Here, let me refer you to one I like." That's what you're getting, right? Oh, you have the sniffles. You probably have a cold. Here, you want some prescription? Because I know about some pre-existing condition. Here you go. So traders, it's the same thing, somewhat. You should be amassing information and trying your darndest to understand it, and then you go and you specialize. Because here's what happens if you don't. If you're not the rare bird that can do it all, and again, they're rare in trading, very rare. If you're not the rare bird that can do it all in trading, what you get is analysis paralysis. You get too many signals, you have too many strategies going on, and you only have so many hands, you only have so much time, you only have so many funds, you only have so many eyes, you only have 2. You're not going to be able to trade multiple platforms well, do penny stocks, and do futures, and do commodities, and do options. Maybe you can swing trade in there, right? Maybe. But if you think you're going to be some Rain Man, hands all over the place, doing all these things at the same time and doing it well, all you need to do is drive down the freeway and look for the person that's driving bad. Okay? Pull up beside them, look in, and 9 out of 10 times they're on their phone. So, ladies and gentlemen, we don't multitask well, which comes back to why I say I don't trade the open with you guys. I don't multitask when I have big money on the line. I don't multitask well. I don't. And you can ask everybody in the Discord, the old Discord that doesn't exist anymore, if I ever traded the open with them. And they'll all tell you, no. Mike always came on a few hours after the open, and then he spent 3-4 hours with us and talked markets. And he does well. He hits it out of the park. He does exactly what he's been doing on YouTube. And he did it on Discord for a year. That's what happened. But I'm like anybody else. If you get me focused on too many things at once, let's look at this a little bit more. There you go. Looks like a buyer is sitting here. And look at how price is just, it's finding fair value down here, right? Between this high but above settlement. Nice place to cover out, Rayner, at 76. He covered out from 80 and a quarter, I believe he said, at 76. That's a nice trade. Rayner, why did you cover out at 76? By the way, Alex Lee. I spent a lot of time reading a lot of crap um, that wasn't useful. So I'm only trying to share the stuff that I find to be very pertinent. Um, but like anybody, I wasted a lot of time buying books that didn't really give me much help. So for example, I've read a few of the series of the Market Wizards, like maybe three of them. Um, and I didn't find that they really helped me with day trading or with strategy. But after trading for a while, some of those things are helpful for psychology and big picture things, right? But were they particularly useful for me early on? Mm, not with certain strategies. Made me kind of think about risk management, but even then, some of what they were saying, it didn't seem relevant to me, right? These guys are talking about, you need to learn how to lose. And I'm like, what are you talking about learning how to lose? I'm a winner, like learn how to lose. It just didn't seem like it applied to me, right? And until I started to trade and make stupid mistakes and tilt and all of that, so there's these, sometimes things will apply to you because of your experience and sometimes they won't. Um, I think if you've been trading a while and you have some exposure to the market, then I think a lot of those books will make a lot of sense to you. It's like, here's somebody I really appreciate, Wall Street Jesus. Um, when I listen to him talk on YouTube, I can identify with everything he's saying. Everything. It's now 10 years ago, I would have said this guy sounds like some ex Wall Street douchebag that is talking in parables. Give me some meat, right? But now I'm like, golly, that's deep. Makes a lot of sense. I've been looking on my heat map. So, oh, okay, that's cool, Rayner. So you just saw some liquidity come in, Rayner. So you had a little liquidity come in, and then you said, I'm going to get out ahead of that liquidity. I'm guessing. All right, let me look back up here. Oh, that's cool. Thank you. Uh, yeah, Simsum. I like Chivaco because that's what he does. That's what the markets are all about, talking in probabilities. Yes, Panama. I'll tell you. I bought here. Incoming humble pie story. Here we go. All right. Let's see if I can find this. I bought 39. I bought right here 39.12. So I live streamed all of this when I bought and told everybody exactly. So first I was buying E-mini contracts. I don't know, somewhere down in here on the way down, right? 39, 30s maybe, 20s. And I was scalping bounces and holding two contracts. And then it'd go more. I buy 15 contracts, scalp out, make a good amount of money, and then hold the two contracts. I got down to 30. Travis G, there is no Discord. It doesn't exist. I've been saying it a bunch of times, but maybe you guys are hearing that there is a Discord. There's no Discord anymore. It does not exist. So if anybody's on Discord claiming to be me, they're lying to you. Oh, it's all good, man. I'm just saying. There's there is no Discord anymore. A lot of people ask me about the Discord. So anyway, if anyone's trying to get money from me on Discord, please don't fall for it. I'll never, ever my DMs are off on Discord. I do exist on Discord. I'm like trade your at, I think, or whatever it is, trade your plan. So I do exist on Discord, but I think all my DMs are off. So you should never even get a DM from me. Because, you know, when I had my Discord, it got really crazy. Yeah, I should add it to my name, no Discord. Yeah, Dirk Hepner in this chat said, Mike, you should remove your Discord link from your descriptions. And he's right. I had it in there for a while. And then, but the problem is I have old videos where I talk about the Discord and show screenshots from the Discord. I'm like, look at how cool this is and organized. And it was cool, but it just took too much time. So anyway, I'm not going to talk about Discord today. Fan page for TYP. I mean, make a fan page. I mean, someone's making money off of me. I don't condone that. That's just wrong. But if you want to set up an altar, I mean, that's weird, but whatever. Kimster, I love the question. I'll answer it in a second here. Let's see. So Panama asks, do you hold positions for longer moves? Panama, I scalped. This was, I don't know, on what day? Let's see. I scalped on 5/18. So there's a stream where I was playing E-mini with you for you guys on stream. And I scalped down. I was paying anywhere from 15 to 20 to 25 E-minis. And I got my position down to 39.12 on the E-minis. When it hit around 39.20, I got out of those E-minis, the last two. I was scalping for a swing position, and I converted them to micros with about 1 point of slippage. So I was going to swing long those micros from 39.12. 80 point stop. All right, let's put this on, and I'll show you my position. All right, so I was targeting up here. I got it to 39.12. I would just call it 1250. 80 point stop. You want to look at Humble Pie. Right there. I stopped out of that swing position down here. So essentially about 20 points off the lows is where I stopped. 20 micros. I went from here to here. My TP1 would have been up here with this gap fill. So, yeah, I do. I don't do it very often because I have more edge day trading, to be honest, but I did it and I got punished. So yes, that was my loser. It was public for everybody to see. Told you where I got in, told you where I got out. Someone asked me, who was it that asked me? Someone said, Jesus, you had an 80 point stop. Ha 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 ha. Who was that? Jonathan Tran? Was that you? Jonathan's probably gone. Jonathan's probably, I don't know. Hopefully doing something else besides trading related right now. I'm about to go get off here. 2 o'clock. Markets, an hour. I am not gonna trade Globex tonight. Okay, see you tomorrow. All right, adios, Rainer. So anyway, Kimster, do you use any indicators other than EMA VWAP? So every indicator is based on a few things. It's based on volume, price, time, you know, size of the market, how quickly the market moves through time. So footprint is an indicator, right? So numbers, bars is a study. So that's its own indicator. So yes, everything you see up here on this screen is an indicator, right? So here's the simple moving averages, 10 SMA, 20 SMA. Settlement, developing point of control. Blue, light blue line, straight. Value area high, volume value area high, I should say. Red line, volume value area low. It's somewhere down, probably near the low, right here. Okay. This is volume per second. That's an indicator. This is volume in the bars. It shades according to percentage of volume for session. That's an indicator. It tells me that it's outlying volume or outlying volume per second. So that's an indicator. Point of volume profile with deltas, net deltas, that is an indicator. Market by order, right? It's segmenting normal data into size, which is a special way of indicating something in the market. That's an indicator. Oh, what the heck? Am I still on? Sorry. So volume profile indicator, this is settlement, this is value area high, the white is volume point of control, the yellow is 10 SMA, the blue is the 20 SMA, red, value area low. This is volume, outlier volume. The bigger it gets compared to every 5-minute bar prior in the session, the brighter it gets. So that's an indicator. Volume per second, that's an indicator. All right, it's labeled down here. Deltas at every tick, that's an indicator. MBO, that's an indicator. Footprint volume profiles, those are indicators. Deltas, those are indicators. As you saw on the candlestick charts, this is TD Ameritrade VWAP. That's an indicator. Notice I have the 10 and 20 SMAs. Those are indicators, right? I still have settlement. I still have developing point of control. I have volume down here. Okay. I have volume profile here, right? So that's an indicator. I segment things up into various time zones. So in other words, I'm analyzing this time zone that it's behaving differently from the European session, which it sold off, by the way. So that's an indicator to me because it indicates when a new time zone starts, and therefore I should start thinking about a different move in the market. So that's an indicator. I have gap fill or gap indicator here, volume profile, weekly volume profile on this 30-minute chart. So that's an indicator. I have a volume indicator. On this daily chart, I have Bollinger Bands with 2 standard deviations. Uses a 20 SMA, I guess median, right? So 20 period simple moving average, 2 standard deviation Bollinger Bands. I have a stochastic on the daily, slow and fast line. I have RSI, the orange. So that's an indicator for the daily. The same thing on the NASDAQ. So again, 30-minute uses a weekly volume profile. So those are indicators. On the TPO charts, I use volume by price, and then I use the TPO. I have TPOCs and I have VPOCs. I have 50 and 100% extension of initial balance, so that's an indicator. I segment all the time zones out on my time, price, opportunity charts. So I'll load it while you guys are waiting. I have poor low, poor high indicators for the TPO charts. I have singles indicators for the TPO charts. Again, I talk about the various time frames. I separate out Asia, USA2, RTH, the European session, and then back all the way to the RTH session. So I actually split apart my TPOs for that. I'll show you right now. It's ready. Bing. So you see that? So here is we're in USA2, and then Asia starts at the new daily. It's not really Asia, but it is for me. The European sessions, midnight my time or 3 a.m. Eastern, and then RTH again, which is, what happened today. So these are the extended trading hours, the Globex, and I split these all up. So the fact that I split up these sessions is like an indicator, because I'm saying I want to segment the data to give me some edge. So I know maybe your question has to do with like, what special indicators do you use that just give you some signal? All of these are special indicators that give me a signal. So I also use like, it's the one you guys are not going to see here, but let's see if I could move it in or something. Okay, I also use a bookmap kind of style chart that has heat map, 1,000 volume bars, and then big bubble indicators with bid-ask volume delta imbalances that extend out for the whole duration of the chart. And then it also has a volume profile for the visible chart on the right side. And then it also has a bid-ask volume ratio indicator on the bottom, which is just, again, showing the strength of the market in that, do we rise on ask volume, or do we decrease, or does the price fall on bid volume, meaning volume that hits the bid? And are there divergences? And since it is a ratio, right, so it's percentage based, does the market typically find a bottom at the same ratio throughout the day? Answer to that question is yes, it does. So that's a useful indicator to give you an idea of where to go long. But like with all indicators, you have to use common sense. So I'll appreciate that, Kimster. Yes, appraiser guy. Footprint is still ask volume minus bid volume on the left here, right here. And then this right side is volume. So this last part, Kim, I will show you what that chart looks like, and I'll open it up so you guys can see the settings. Chart title. There you go. Here it comes. Let's see. Am I on the right? Oh, I'm not even on the right screen yet. Okay. It's all right. I'm going to open up my footprint chart, and then that chart will be up. Okay. Let's see. Just give me a second. I'm moving stuff around my screen. It's doing stuff here. The market depth historical graph on this, it always causes a little bit of issue. Okay, here we go. Footprint. Boing. Here you go. So here's something I have that's not on any of my live stream stuff. Just because whenever I have it up, people are like, I can't see everything else. So it's got your settlements, right? So here's T+2 now down here. Every time it crosses over the current settlement period, it turns into T+2 or yellow, right? Up here. We also have current settlement right here. So T+1. We have opening VWAP 30 seconds. That's my own custom indicator of VWAP of the first 30 seconds of trade for the RTH. I just find we rotate around it. It's not always perfect, but it tends to, like, as you can see here, we rotated around it a little bit. This one's weird in that it's cutting it up here, and I don't know what's up with that. Honestly, I have no idea what's going on. Let's see, 6:30? Oh, yeah, that's 6:30. So it emanates from here. So that's 6:30 a.m. So here was the open today. And then, so this is that bid volume ratio indicator. It's an out of box thing. It's so there you go. Uses the main price graph. It's called up-down volume ratio indicator. So moving average 20, use the exponential. And it's based on up-down trades. That's it. Or bidder ask trades. So it's a ratio. That's it. Puts in chart region 2, and there's the look back. Really simple. And so you can see here, right, where when this thing hits about this level, right, you can see right there, it'll often go through a bottoming process and then reverse. And like, you know, it behaves differently on different days because this is essentially like a meter to measure the strength of participants being able to move the market based on how much the difference is between the bid and the ask volume. So this is a big, like they're hitting way more bids in this area from here on this pullback to through here. The bid ask volume, it's like you got to realize that this is segmenting here. Where is it? Yeah, right here. So this is segmenting 1,000 contracts at a time. So these are 1,000 volume chart. So this represents, this closes after every 1,000 volume. So you've got 1 bar, 2 bars, 3. Now you can see these bars are moving up through this whole area, which has like all this consolidation. And this is every single one of these bars here. Kim, you're going to get a sweet response because you show a little appreciation. So I really appreciate that. So here, each one of these bars is 1,000 volume. So you can say this is 5, 10, 15,000 contracts here. And yet here, 1 bar, 2 bar, 3 bar, 4 bars, 4,000 contracts, and price went all the way up through that 15,000 like it was nobody else's business. And it did it on an imbalance of hitting the ask or ask volume, which is when players initiate and hit the ask, right? So positive delta. It did it while this spiked. It was all buying. And there wasn't very much. So in terms of the players who were selling this versus the players who got into position here, or maybe, I don't know, scalped this area or built a position, this is like 15,000 contracts, and it's like 4,000 or 5,000 contracts to get it all the way up here. And look at the spike of the bid-ask volume. Now, when we max out, what happens above these highs? So let's pinpoint it, right? Here's a high, pinpointed to here, pullback, right? So let's put a line on here. It'll help us to think about it in terms of graphically comparing what's happening. It's a representation of order flow, essentially. So this is a representation of order flow. How many asks are getting hit versus bids, so it's a high ratio of asks, and then compare that with this price movement, it's almost completely linear. In other words, every single time they hit the ask, they move price. There's very little retracement until here. Now, that orange dot represents, so first there's liquidity here before, then liquidity comes in. That orange dot represents like an iceberg indicator for me. Okay? Which is why there's an extension here that you can't really see from that orange dot. It's why I have the orange dot there, is because if you have the market depth historical graph or the heat map on, it can cover this up if there's liquidity there. So I have the orange dot to know that if there is some highlight here, I just look left until I find the orange dot. Then I know it was actually some iceberg or bid-ask imbalance. All right, so, but the reason I have that orange dot is to highlight that. So, okay, so it's no huge size going off, which is there's no bubble. There's no huge size. So we know it's an iceberg because there's no bubble, but it's a whole lot of imbalance there. Notice where the imbalance comes in. Right here. At the prior bid-ask volume ratio high, right? Just right above it. Boom. Okay? And so someone wanted to sell into new highs. Went a little higher. This is still going bananas. But now look, people are still hitting the ask, so they're buying aggressively. And that ratio is going really high, really fast. But what is price starting to do? Price is starting to actually... price is actually starting to kind of go more sideways, while this is going straight up still. That's a divergence of sorts. Then you get the big, what? It's blue, meaning someone went in and hit a big offer, ask. They hit a big limit order that was sitting on the sell side and filled it. Foomp! And when that big limit order got sold, they sold it. And then it rallied back to that limit order, and then they sold it again. So short term, this player that sold here, when it came back up to their entry, they sold it again. You see that? A little rally, and bing, sold it down. So this player, this big size player here, was willing to defend their position. And you see that by this blue bar up to it, right at to the tick, right in the middle of that circular bubble. And then they sell it straight down, thump, and it's on and smashing. And at some point, they probably covered out down here, scaled out or something. You know, if I had sold this like that, just thinking like the wolf, I would have covered into this area probably. But if you can move the market this much, I don't know. Looks like maybe they started to cover it out here, maybe. I don't know. Because, you know, think about it from this perspective, right? If you think about this price action here, if you, first off, we bounced here, right? See that? Wick bounced 45.75 all the way up to 48.25. Okay, so 3 points. Right back to the ice here, by the way, and then rejected. But anyway, so it bounced here, but then when it made its move back into prior consolidation, so think about this. Consolidation, false breakdown, all the shorts cover, right? Shorts get bonkers covering. Cover, cover, cover. Now, as we come back, where do the longs want to probably say, damn it, I'll add or I'll get out? Right? Maybe you add here because you think shorts are now really going to be hurting through here. Where is that? 46? Okay. We bounce. Then we roll through it. Now the longs capitulate. Now, if you're short from this entry here, This is the breakout to the short side. This is where you're wrong. You hold underwater. You haven't had an opportunity to come back to the zone and get out at break even. Think about it. This is a story of trap traders, guys. This is what I'm trying to teach you more than anything. Just based on structure. Okay. Breakout to the downside. Bounce back up. Some smart short-time traders say, I'm out. I'm wrong. And most of them get really out here. Or the dummies add, capitulate above new highs. Now, you always have the stragglers that just refuse to take a loss. Okay, so we come back in. We bounce at the highs. We roll in. Now, if you were short from this breakout, right, this is a bull flag. If you're short here, right, where the heck are you looking to get cover? What do you got to do if you're short? You got to cover. Oops. You got to cover right in here, right? So shorts, all the ones that are over levered, get out. Blah 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 blah. Maybe some huge dude buying way up here at highs, right? Somebody having a really bad day. We roasted all the shorts, right? Above these highs, and you're thinking it's a good call to go long, right? Then we come all the way back in. We had this price. Where do the shorts? If it's the first time it's come back to this zone, and you're short. Remember, if you're short, you make money by the price going down. So if it's coming down here for the first time since all that, where are you going to find the bounce? Here. What does it do? Bounce. The shorts get out. They probably cover in through here. They are the ones propelling this market, right? If you see this bounce, maybe some of the dumb money gets long through here. Where do you put your stop? Underneath these lows. Boom. You get a little bit of movement. So some HFTs profited from those stops here. You can see it by this blue bar. And there's no buyers left. Then what happens? You make new lows. You get 4,000 contracts in a row that consolidate down here. And then you take out all those lows. And then you what? Bounce on. This is, if you know what this is, this teal line here is opening VWAP 30 seconds. So it's the VWAP of the open of the first 30 seconds of regular trading hours trade. It's always a high volume concentration area and often defended. On it, and then up we go. See how putting these things that you have figured out are high concentrations of volumes that are defended every day? See how this helps you? So now, does everybody teach about this opening VWAP 30-second indicator? No, I've never seen anybody else use it but myself, ever, in the history of trading. Why? Because people want to use what everybody's using, but is that where your edge is? No. Your edge is in thinking. Your edge is in thinking about areas of the market that not everybody's talking about that relate to your hypotheses about how the market moves. So I've repeated this over and over and over to you guys, which is we care about the highest concentration of volume in the shortest amount of time that is consistently defended or where liquidations occur, hence settlements and the open. But what of the open? Everyone has their idea. Oh, 30-second range. You're getting close, but that's not it. Why? VWAP. Why do you think all these? So look at hedge fund telemetry. Thomas Thornton. What does he constantly have up in his Bloomberg terminal? VWAP. He has VWAPs of all the major sectors and stocks, and he says If we hold VWAP, then up we go. We don't hold VWAP, and a lot of them are failing across sectors, down we go. Why? Because VWAP is volume weighted average price. It's the average price weighted by volume that is already transacted. What's the best volume weight every day in the E-mini? It's settlement. Last 30 seconds of trade is the highest volume of the whole day, every single day, without fail. Well, that's why you have it on your chart. Because rotations above and below matter. And when you factor in settlement of, or cash settlement of underlying shares on T+2, it matters even more. This stuff is like logical, but you gotta work to understand it. And if you do that, I guarantee you guys are gonna see things in this market that make so much sense that you're almost gonna be in disbelief that you understand it and that you can utilize it and play off of it every single day. And you'll be thinking to yourself, I've been told that this is so difficult. It's so difficult to have a rationale or a hypothesis about the market that they're all just random. No, you wait for these levels to hit and you focus on these high pockets of highly concentrated, and then you can derive most of the action that occurs before and around these areas for the rest of the day. If these areas are defended, they turn into monstrous levels that you can make a living off of only trading these levels every day. But if you start to think about this overused word called rotations, if you start thinking about the way that buyers buy around big levels and where they sell when big levels fail, then you can get on the train of liquidation breaks. Then you can start, when you see a level fail, that's important. And why do you know it's important? Because you put it on your chart based on actual volume that transacted there, hence settlement. Settlement is defined by the CME as volume weighted average price, or VWAP, of the last 30 seconds of the cash session, or the 30 seconds leading up to 4 p.m. Eastern. Is that enough for you? That's it. That's what settlement is based on. VWAP of that 30 seconds. So everything's VWAP based. So these VWAP traders, sounds like I'm referring to VWAP Trader 1, I'm not. But people who use VWAP, they tend to understand, if they follow it enough, they tend to understand that the market moves around traders who either bought or sold certain areas, and at these levels, when they extend out into time, they tend to be important. However, the caveat that I have about that is that if these VWAPs extend out into time and don't touch any horizontal or at tick price support or resistance levels, then they tend not to be as repeatably tradable with defined risk, which is why I don't use an anchored VWAP anymore. I have charts that have anchored VWAP on them, and they're there, and I do make use of them from time to time. But I only make use of them around significant events. So where Brian, what is his name? The anchored VWAP guy. Brian, what is his name? Man, I can't remember his name. He's the anchored VWAP guy. He teaches about anchored VWAP. He's the master. Like he says, use anchored VWAP around significant events or significant highs or lows or pivots in the market, and price tends to come back and find support, especially on a higher time frame. Brian Shannon. Thank you very much, Dominic. Um, and that's how I kind of use it. It's like if we have an FOMC going and the market made a massive reversal. So, for example, go back and put VWAP on the FOMC, the day after FOMC. So put it on that high and look at VWAP from those highs. Well, you'll see some interesting things. So, anyway, market's shut down. I'm gonna shut it down. Thanks for hanging out with me today. How long is this stream? Boy, they just keep getting longer, don't they? 4 hours, 35 minutes. I'm gonna have to be around less this week because I'm traveling late this week to the Bay Area for a wedding. Gonna stay in a hotel on the Central Coast here for a number of days, just to have a little family vacation time. So, as I kind of prepare for that with the family, I'll be on less. So just FYI, you guys stay profitable out there, and thanks for coming and hopefully enjoying markets with me, because I sure as heck enjoy looking at these markets. So anyway, thank you, Panama. Thank you, everybody. I appreciate it. Have a very wonderful evening, afternoon, morning, wherever you are out in the world. All right, take care. Bye.